So morning everyone, welcome to AMI Broker Basics webinar, and today it is an intro session about AMI Broker and AMI Broker concepts. So the whole day we'll be focusing on AMI Brokers. We'll be exploring the features in AMI Broker and how to use it, and we'll be in the afternoon session we'll be focusing on how to backtest a trading system, how to optimize a trading system, what are the parameters we have to focus while you are doing system trading. Then we'll be covering about how to evaluate a trading system, whether the trading system will work or not, or what you can expect from the trading system. Is this trading system works across different time frames, or what is our knowledge about the trading system, how to control the risk? So all those things will be discussed in the afternoon session, especially the backtesting, optimization, walk forwarding, and Monte Carlo analysis. Right. So the morning session just covers the basic features of AMI Broker and a little bit of intro to AMI Broker AFL, how a non-coder can understand AMI Broker AFL without any programming skills. Right. So those sort of stuff will be discussed, and a little bit of introduction to design system and design concepts. So we are not talking anything much of theoretical here, but a basic idea, basic overview what an trading system is all about, and what we can expect from the trading system, and what are the nitty-gritties of using an system trading compared to the traditional discrete trading systems. Right, so we'll be covering a couple of basics of AMI Broker features, and understanding the AMI Broker concepts. This is the agenda throughout the day. Right, so what I do, so I guess you know about me. I'm running Market Call since 2007, and we are almost a 9-year-old blog now, and I'm a system trader, currently experimenting with discrete trading for the last 2.5 years, but my effective experience in discrete trading is in a live market is closely around a year. But whereas I'm a system trader since 2010 onwards, so most of my expertise are with designing trading system, understanding the trading systems, and evaluating the trading systems. So whether the trading system will work or not, or which is a better time frame, so whether to optimize a trading system or not. So those sort of expertise I developed over a period of last 5-6 years. My core expertise is with trading systems, whereas the discretionary trading is completely an different set of skills. Right. So yes, I do experiment with discrete trading skills like market profile kind of stuff. Generally, it's both are completely an different way of looking into the markets, right? So if you want to know more about me, you can go to www.marketcall.in/about, and you can know a little bit about me there. And I used to run a financial services startup, so we are running a financial services startup right from 2014 onwards. So now we are almost a 2-year-old company. And so today's we'll be going to discuss about a couple of introduction to trading system design and design concepts. Let's look into the basic building blocks of a trading system. So what are the essential blocks which are required to required for a trading system? So we need a trading software like AMI Broker or Ninja Trader, or let's say multi-charts. There are a number of trading softwares there, popular softwares like eSignal, and it's more. These days brokers are trying to convert their trading terminal into trading software as well, where we can do analysis, and the system will on behalf of us, it will try to tell where to buy, where to exit, kind of indications will be there, or where we can do our own analysis. That's what the trading software does, and trading software is like the skeleton. So, right, for a skeleton, with muscles, but it doesn't have any blood. So the blood is nothing but the trade data. And anyways, the trade data, it has to be, some softwares comes with integrated along with the data, like softwares like Spider or Falcon. You don't need to buy a software. You don't need to buy a software separately and data separately. It's a pre-packed, and both comes in one combo package. Whereas the softwares like AmiBroker or NinjaTrader or multi-charts kind of softwares, so they have two components. One is trading software and another one is on trade data. So we have to integrate both, and the data can be bought from the data vendors, and it can be integrated with your existing trading software which you are willing to practice. Say you have an AmiBroker in your machine, and by default it doesn't comes with any Indian data vending products, whereas you have to go to a data vendor, you have to subscribe to the data vendor, or there are a couple of free tools in the market. You can connect with those tools along with your AmiBroker, and you can start getting the charts live in your system, right? So the trade data can be either online or an offline stuff. The online stuff in the sense you connect to the data vendor, and the data vendor supplies you the data to your software. Whereas most of the trading software supports importing the data from your local machine. Say like you have your data in an Excel or in a CSV format, and you want to import into your software. So most of the software supports importing of such CSV data, or importing of such anything on the text file or an CSV file. Most of the software supports, so you can import such offline data into your trading software, and then you can do your own analysis, right? So there are two way of importing data into AmiBroker. Anyways, we'll try to get a little bit of more into that. Then comes your trading rules. So trading rules are generally some sort of mathematical formulas which tells you when to buy, when to sell, when to short, and when to cover. It is not necessarily that it has to have all the four logic. It could be some sort of an investing. If it is an investing model, it is just a long only, right? So it generally has only buy and sell logic, going long and exiting long, right? Whereas if you are using some sort of a dynamic strategies like long short strategies, you have to put the rules like when to go long, when to exit your long, when to go short, when to exit your shorts. So those sort of rules, it has to be coded, right? So most of the traditional softwares like AmiBroker or Metastock or NinjaTrader, they have their own coding language basically. So it's something similar to C, C++, or some people adapt some sort of a vector-based trading language. So to code your own trading rules, one has to be a programmer, or even a non-coder can build their own trading system to some extent when it comes to AmiBroker or Metastock. Whereas if you want to code a NinjaTrader or something like a multi-charts, then you need a certain set of programming skills to do that. So that's where the softwares like AmiBroker or Metastock come and solve, because those software support something called vector language. Even a non-programmer can understand those language, and they can start building their own trading rules. As long as the rules are not so complex, as long as the rules can be mathematically returned, any rule which is mathematically which can be mathematically represented. So those rules can be coded in trading softwares like AmiBroker or any other software, right? So if you want to get a real edge, the trading software is not going to give you any real edge here, because you can implement the same trading rules across the softwares like AmiBroker or NinjaTrader or any other platform. That is not going to, the software alone is not going to give you any edge, because the same rules can be implemented across any other softwares, right? So AmiBroker, so there is no point of asking like which is the best software I can use. So There is no such question. I mean, to answer to that, there is no such. The question itself is a wrong thing. So let's say I have I have a system which is having an edge in the market. If I am going to implement the rules, the same rules in Ami Broker and Ninja Trader, the output is again going to be the same thing, right? So which software you are comfortable in using it? So I will say that you better try to adapt to that software. If you're comfortable with Ami Broker, then go with Ami Broker. If you're comfortable with Spider, you don't want to design your own trading system, then you're looking for some ready-made packages, then you should approach people like Spider or Falcon. Or if you're comfortable with .NET, then you can try with, if you are very much passionate about .NET programming, then I should recommend you to go with Ninja Trader or with multi-charts. So if you're a non-coder, then I'll definitely ask you to try with Ami Broker or Metastock kind of vector programming language, because these are the platforms where a non-programmer can understand, a non-programmer can understand to a greater extent, and they can build their own trading rules, right? So they can do their own backtesting, validation without any great programming skills. And so trading rules and testing and validation, it's a combo package. It's a critical component of an trading system. So along with that, position sizing plays a key role, and the major part is here with the risk control. The risk control is the one where you are seeing the risk, how you are attempting to control it plays an again a major role in the trading system. So these are the internal blocks, whereas a trading system can be affected by the external blocks as well. So one is the market participants in the sense, let's say if I am having the same system prior to 2005, right? Prior to 2005, there are no market participants, like there's no concept like HFT or algo trading concepts, right? So though if I'm testing out the same indicator or I'm trading same set of trading system sometime back in 2004 or 2005, my the trading system behavior might be different, completely different, because the nature of the market participants. Right now, there is a the landscape of the market participants has been totally changed, right? So we have now a wide variety of participants, and new intelligent participants are emerging every other day. So the more the participants are arriving intelligently, more the system landscape changes, and that makes your trading system behavior to change. Um, Realizing that change is much more required to understand that you're in the very late stage of the trading system to use, so better to avoid such systems, because the similar systems are there in the market and it's widely available. So any systems which is widely available across the market, like it may try to lose its edge very slowly and steadily. So let's say I am posting an AFL, and next other day it is replicated by some, let's say some 10,000 traders across different markets, and more and more people are coming and adapting the trading system. More and more people are coming and adapting the trading system. Let's say a particular style of trading system. So these days, if you understand, most of the people are interested in looking into ATR-based trailing stop loss models, right? So people are familiar with the super trend, and people are familiar with some of the indicators like KPL swing, NMA swing. So all these models are nothing but a simple ATR-based trailing stop loss models, right? So now the more and more people are trying to adapt ATR-based models. Very sooner or later, the system may lose its edge very slowly and consistently. It doesn't lose it overnight, but it may take a big time to lose. But more the system adaptability is faster, because these days whoever want to do an algorithmic trading, first they want to try out with super trend, right? So I don't know if anyone else is testing with some other trading system, but initially, I mean, if someone is very new to trading system, someone is very new to algorithmic trading, they find Supertrend as a fascinating system here, and they want to try it out, right? So anyone who is new to system trading concepts, they want to try it out initially. So what I'm seeing is the adaptability is there. The market participants are easily adapting to the system, and since it is open to the internet, anyone can adapt to that system faster. And we don't know how fast it is, but I'm seeing an visually seeing an the rate of adoption is faster over there. So if you are having a trading system and it's widely followed by a different, a large scale of people, then your trading system behavior may vary drastically. More the people adapt, more your trading system is lose its edge slowly and consistently. Right? So market participant has a control to change the behavior of the trading system overall. Whereas if your system is having an is not widely followed, it's not easy to adapt, it may take long time to adapt, then if there is some entry barrier in your trading rules, right, that gives you the real edge. So that is where it comes to an trading system design, how to design a trading system which is not widely followed in the markets, what people are using in the markets, what sort of trading systems they do have, and how different is from our trading system, right? So these are the analysis you have to do prior to building your own trading system. Are you trying to build the same thing again and again and again? Are you trying to reinvent the wheel? So there is no edge there trying to reinventing the wheel, right? So one thing you before trying to designing a trading system is how different are you from the other participants? Are you trying to do the same Excel stuff? You have some Excel stuff and you want to replicate this in Broker, and you want experimenting. Experimenting is fine, but when it comes to the real trading, when it comes to the real competition here, thing is whether the system makes money is fine, but will this system makes money consistently, right? Consistently and slowly, will it make returns, enough returns for me to survive, and whether it will whether it will create a real wealth for me or not. So these are the questions you have to ask before coming to that. And volatility has a greater impact on trading system. A trading system behavior will change depends upon the volatility. And the behavior of a trading system will be different in a low volatile environments, whereas the in a high volatile environments, it completely gives a different picture. So, so testing and validating a trading system in both volatile and dynamic environments is much more required. So, why to test in a different volatile environments? Because that gives you a real picture of the trading system, right? So, some people does only the testing, back testing of last 6 months or 3 months, and they'll try to assume that the same output will continue forever. It doesn't mean so, because when the market changes, when the market structure changes, your behavior of your trading system changes in most of the cases. So one has to be clear about how your trading system is performing in a low volatile environment, how your trading system is behaving in a high volatile environment, so that you can manage your you can allocate money dynamically based upon based upon the market volatility conditions. Let's say a trading system is highly shows a high risk behavior in a high volatile environment, then it makes sense to take lower risk, whereas in a low volatile environments it is showing a lower risk. Then in that case it makes sense to increase your bets in the trading system, right? So based upon the volatility, you can allocate your the portfolio dynamically, right? So prior to that, how your trading system is behaving in a low volatile and a high volatile environment, you need to do a self-study. Anyways, we'll try to cover those phases as well. And emotions. Emotions plays a larger role in trading systems. So I seen a couple of people who automated their trading systems, and suddenly, I mean, they are not comfortable in handling the trading system because they are not they haven't never seen an 8 continuous losses or 10 continuous losses. Whenever the system is making an 8 or 10 continuous losses, or if the system is not making money for an 1 or 2 months, they're simply shutting down the system, and then they're moving to the moving back again in the process of the search of holy grail, right? So emotion plays a harder role here. It makes you to switch off the system before it gives you the results, right? So whenever you're seeing some panic in your portfolio, people tend to switch off their trading system, and people generally tend to jump from one trading system to another trading system because of their emotional decisions, right? So these are the external factors, the emotion, volatility, market participants, one has to aware about before trying to design their own trading systems, right? Um, just you can ask me a question, just trying to design some rules and test it out. It just makes money in your back testing. Will it help? Maybe or maybe not, right? So at the end of the day, most of the people, what I've seen in the last 5 6 years, people are using trading systems, I mean the buy sell signal models, as the prediction mechanisms, right? So it is not a, if you ask me, it is not a prediction mechanism. These are just mathematical rules which doesn't have any brain to forecast the market. It is, at the end of the day, it is just a plain mathematical rules, right? At this, maybe at this retail level, the platforms like Ami Broker or Ninja Trader, you cannot build any sort of forecasting models. You cannot build any sort of forecasting model. At least, I mean, I've never seen at the retail standard someone is building a forecasting model, right? So all you can build is some mathematical model which still has an edge by just following the rules, but eventually it is not forecasting anything for you. All it trying to do is it is trying to control your risk and trying to generate larger returns. Generating larger returns and making smaller losses, and the system is having a better risk reward ratio. Whereas a trading system is not, I mean, at least at the retail standard, platforms like Ami Broker and Ninja Trader or whatever be the trading platform, whichever is available at the retail standard, it's not meant for forecastability, right? So you have to take all these inputs while trying to designing a trading system, right? And if you have any questions, I can take questions now because the topic will be slightly getting complex. If you have any questions, you can ask questions right away here in Amiboko channel. Sridhar will try to backtest, but we'll try to take it after the market, I mean, after the post this session, right? So, today we'll focus on the basic of AMI concepts and optimizing the concepts. So, anything which is apart from the basics, so we'll try to do it outside the session, right? So, we'll take it in the Slack chat post the session, anyways. And then, okay, so. So we have to continuously update the strategy. It is not like continuously update the strategy. Maybe revising your strategy once in a year or 6 months makes sense. But jumping a trading system from month on month, it doesn't make any big sense to me, right? So at least you, if you are failing with your trading system, you would have followed your own rules, and then if you are failed, or you may have some system-wise stop loss. Let's say I'm just going to exit from this trading system if I am going to incur 30% of loss stops, which is going to hit in my portfolio. Then I'm going to exit, quit this trading system. I'm not going to trade the system anymore. So in that case, I'm going to look for a different trading system. In that case, it is fine. But suddenly you are incurring loss and you don't have any plans, and you are going to look out for a different trading system, then it doesn't make any sense to me. See, I'm not saying the applications available for retails are not having forecasting capabilities, especially if you are looking for any buy-sell signals, and you are looking as an forecasting tool, then that is a wrongdoing, because whatever the tools you are using, the buy-sell signal models, it's just plain mathematical rules. All it is trying to do is just trying to control your risk, and then it is allowing your trend to continue. So where your risk reward ratio is greater, in that case it makes money, right? If the strategy is itself not having enough risk reward ratio, in that case, I mean the profitability is a question there. So if you want to do some forecasting analysis, something like a market profile, where you want to understand the traders behavior and the market behavior, auction behavior, in that case you have an edge when compared to other forecasting tools, right? So yes, forecasting tools are available like GAN, Elliott, market profile. These are forecasting tools, right? But if you are trying to use anything which is relevant to mathematical models, buy-sell signals, at the retail standard, it doesn't have any forecasting capabilities. Got it? So you should not have a mindset when you are coming with a system trading concept. You should not have a mindset that this system will predict for me. The systems are not meant for predicting at the retail standards. Yes, at institutional grades, people does a lot of complex analysis. They come up with a lot of forecasting analysis, but it is out of our thinking. There are models like HMM, hidden Markov models, GBM, geometric Brownian motion models. So these are time series forecasting models. A lot of some some wavelet transformation models. So a lot of time series forecasting models are there, which these models are meant to predict the future data, right? So at these retail, using the retail standards, these tools are tough to build at the retail level. So what retail level people are having is just a plain vanilla mathematical tools, right? So it does some tools has an edge. Some tools works in only in a particular time frame or in a particular market. So not every strategy will work for every market. Right? So before getting into system trading concepts, you have to have an certain discipline here. Just blindly to follow your own rules. Nothing apart from that. We are not going to do anything. We are not going to do any forecasting here, right? So it's a completely and different landscape compared to your discretionary trading. That's what I want to convey here, right? So when you are coming with a system trading concepts, you have to prepare your mindset, because at the end of the day, you're not going to take any decisions here. At the end of the day, your system is going to take a decision for you, and you're just going to follow it, right? So by just following the rules, yes, you'll be able to get the edge, but you need to have some realistic goals. The realistic goals in the sense, you have to understand that making money at the retail standard with using such tools, you cannot make any consistent money, because the behavior of your trading tools, your indicators will change depends upon the external factors. External factors in the sense market participants, gap up, gap down conditions, emotions, market emotions. Right? Suddenly there was a spike in your system. Suddenly there was a spike in the market, and your indicator behaves differently because of RBI announcement. Your system may enter into a lot of whipsaw mode, and suddenly you get puzzled why it is happening. So what is wrong with the trading system? There is nothing wrong with the trading system, right? Because the system behavior changes based upon the market behavior changes, right? So because it's not forecasting anything for you, as simple as that. So try to have a common sense while you are handling an system trading stuff. And if you want to try it out, you have to do a lot of rigorous testing again here as well to understand the robustness of the trading system. And understanding the robustness of the trading system makes sense while designing a trading system. If the trading system is not robust, right, it may or may not function as it's maybe it is functioning good while it comes to testing. Whereas if you are going in a live market, you may see a different set of behavior, right? So whatever the back testing here are not meant for you may not get the different you may not get the same results. Let's say your trading system has made some 500 percentage in last 10 years, last let's say 5 years. Last 5 years, your trading system had made delivered on 500 percentage, and you're thinking like the trading system is really great, and you're going to trade the same system live. And what you're seeing is whether your system is making losses or you are making a very little money when compared to your backtesting results. And so most of the times, if you are trying to, if you are seeing such behaviors, then you would have puzzled why it's happening so. It has performed well in the past and it is not performing well. Where it is going wrong. So, and these sort of questions you have to be aware about while designing a trading system. Definitely this course will be talking all these concepts aggressively here, right? And okay, Sridhar has a question. How has your experience on your system trading with regards to success ratio over one continuous year following the same system strategy? So when I try to follow the systems aggressively, so I just basically I entered to trade system trading after a lot of frustration with discrete trading concepts. I'm not able to grab any edge in the markets, right? So I initially I'm also in the phase of looking for systems which is going to predict for me. It says buy, and I'm going to buy in this market, and that will make some excellent prediction for me, and then I'm going to make money, right? So over a period of time, I figured that's how the system doesn't work that way, and generally the systems are not meant to predict. All you can do is you can control your risk using those mathematical models, and tactically you can do that, or you can make your controls in your position sizing. So a lot of things has to happen from the position sizing skills. When to risk big, when to risk small, right? So that is where the majority of the edge lies, especially if you are doing any sort of system trading. Analyzing your system trading behavior under various market conditions is required. There are a lot of people who judge a trading system just by backtesting for 30 days or 60 days. If you are doing that and you are trying to extend the same behavior for next 2 years or so, then you are looking at the wrong picture, because you are looking at the very small picture and you are trying to guess the bigger picture here. And trading system behavior, there is no extrapolations, because there are a lot of optimization tools which makes your trading system looks like it is making money, but when you are trying in a real life environment, the trading system shows you a different picture. So again, when I started my trading system, my very first trading system, it made an little money for 3 months, and suddenly I started expecting a different behavior. I started expecting a different behavior. I was literally puzzled. I mean, why it's not making any consistent money? Because it done consistency in the back test, and it also performed well in the first 3 months. Later, it's showing a different picture. What is happening wrong? Then I was trying to fine tune the system, and then again I'm just expecting a different set of picture. So every time I'm just trying to fine tune, I try to get a different behavior, right? So why is it happening so? And there are times I started a system, and the system haven't made any money for continuously for 6 months, and later it started generating money. Right, for first 6 months there are no money, and I was in a dilemma whether to continue the trading system or not. Okay, so later, I mean, the market shows some volatility, and this has happened during 2012 to 13 phase, I think. And market showed a volatility, and then the system started trying to generate money from there on. So, are you in a situation to generate returns? Are you looking for long-term, 1 year, 2 year sort of period while you are trying to play with the system, or you want a system and are you in a stage where you can accept a 6 month of period where your strategy will not make money? There are periods your strategy may not make money for a year or so. Are you willing to accept to that standard, and you want to still continue with the trading system? But later you may see the fruit, but it may take time, like a bamboo tree grows, right? So if you understand the bamboo tree, anyone understand the bamboo tree story? It takes lot of years for the bamboo tree to grow for some couple of inches, but later within a few months you can see that a bamboo tree grows faster, right? So there are strategies which will be something like that. It may take time with respect to, it may take a lot of time for your strategy to make money. But suddenly there are periods which make very faster returns. There are periods it may make very slower returns, or there are periods it may end with the stage of sequencing losses, right? So you have to go through those situations. If you are coming to a system trading concepts, then you have to be completely well aware about these behaviors. Otherwise, I mean, once again you will get puzzled and then you will bounce back, right? So finally you will decide like system trading is not the one right for me, and then I have to wind up my business here, nothing to do anything over here, right? So what is the standard in generating returns? If you are able to generate returns year on year, if you are able to make an compounded returns, I'm talking about in compounded terms, right? So I'm not talking about absolute terms. Compounded and absolute terms are completely different. And if you are able to generate a returns of 20% compounded year on year, I would rate the system as an fairly decent. And if it is anything above 30 or 30 plus compounded, it is an excellent. It's an excellent one. Means, I mean, you will be able, if even with a 20% compounded year on year basis, you'll be able to double your money within 2-3 years, right? Because it's a compounded thing. So the goal is to create a trading system which is reasonably good, and it should make consistent money. You should not have any greater risk. The people want to have a system which keeps on making money, right? So ideally the money has to, either it's coming slower, it's fine, but there should not be any strong whipsaws in your portfolio. It's like, I mean, you keep on making money, and then it's your strategy is losing, again making money, again losing your complete portfolio. It should not be whipsawing. Your portfolio should not be whipsawing, right? So if you are designing a strategy, the expectation is the strategy has to be having a decent risk reward ratio. Also, your strategy should have some, your money should be keep on growing for some time, and then it loses a little bit, and again it's growing, again losing a little bit. fairly, I mean, if you are seeing over a large period of time, your money should be grown very slowly and consistently over a period of time. That's what is a really realistic thing what we can expect from the strategy, right? So you cannot expect to be an overnight rich man by trading in system models. System driven models are not meant for traders who have an expectancy of, like, I want to make 5% returns every month, I want to make 10% returns every month, I want to make at least 500 rupees every day, right? If you are having such thinking in your mind, then system trading models are not meant for the people who are having similar thoughts, right? So let's say I want to make 5,000 rupees every month. Can I do with system trading? No, you cannot. Can I make 5,000 rupees every month? No, you cannot. Can I make 5,000 rupees every year by trading this systems? No, you cannot. There is no such guarantee here, right? There is no such guarantee to say, like, some month you may make some 30-40% returns. Next month you will lose 20% returns out of what money you have made, right? So it will be always a mixed combo. You cannot make any solid returns month on month on a day-to-day basis, right? Because people have such requirement because they want to predict this market using these buy and sell signals. By just looking into the buy and sell signals, people are getting more and more biased that it is having some sort of predictability tendency in this market, but it's not actually that way, right? So there are times we had ran some 2 to 3 systems parallelly, right? So one system deteriorates and then the other one safeguards, and so we experiment a lot of stuff with system trading, and I've done freelancing for one of the US guy, and where I learned how to build timing models, and we parallelly ran in 8 virtual machines. We ran strategy using interactive brokers. We automated the stuff using AMI broker. So we experimented a lot in system trading concepts, right? So I mean, we'll try to get into the content back. So am I clear, or you have any questions here? Okay, Sridhar Rao asked, is it true when one of the system trading concepts goes to the masses, as to what is the strategy used for the particular system, does it start fading on the returns? Yes, see, any system where the adaptability rate is going to be very huge, right? So I'll come to that concept. There is a concept called diffusion innovation model, right? Anyways, I'll come to that model. Any strategy where the adaptability is faster, where, let's say, a super trend, it's very easy to adapt. Sometime back, you don't have a super trend strategy apart from Falcon in India, or you may max to max you can get in MT4. Now what later happened, I coded in AMI broker, right? And later Sharekhan also implemented super trend. Now everyone wants super trend because everyone knows super trend. Everyone knows super trend. Because of that, they want to trade super trend. Right? It doesn't mean like the edge will lose it. The edge will be got lost within a day or two. It may take months or it may take years, but you can see the returns will be fading over a period of time, and maybe 5-6 years down the line, it will be yet another indicator. You may see super trend coming in your classical textbooks, and every people who earlier they used to start reading candlestick RSI, they'll also be coming to know about super trend in their very early stages, right? So again, super trend is just an ATR based models. People love ATR based trailing stop loss models because they think like it's going to control their risk. Obviously it is doing that, but what people in the masses at the retail level, what they are using at this point of time is they use NMA system. Again, NMA is nothing but Nick ATR based trailing stop loss mechanism, and most of them are ATR based trailing stop loss to my knowledge. One is an KPL swing, again it is an ATR based trailing stop loss. Super trend ATR based trailing stop loss. Chandelier system ATR based trailing stop loss. Most of the system which is having an trailing stop loss mechanisms, which is available at retail scales, is mostly ATR based trailing stop loss. Mostly ATR based stop loss. Anyone who wants to test out his algorithmic trading skills, but they don't have enough programming skills or enough trading system design ideas, they tend to use such models without doing any due diligence, right? So, frankly speaking, I mean, maybe maybe the algorithmic traders who are adapting to an algorithmic trading models these days, the world is more likely to be an 60-70% of the crowd is more likely to use average true range based trading stop loss mechanisms, and if more and more people are going to adapt that model, then there is a possibility that the system, the market behavior may change, or there are possibilities that it doesn't happen overnight, but over a period of time you can see it happening, right? Fine, let's get into the PowerPoint here. So, what kind of trader you are? Seriously, I mean, you have to define yourself when it comes to systematic trading, right? So, based upon systematic trading, there are people who want to do only intraday trading because they want to leave it to the software. They don't want to handle it. They don't want to handle it because it's emotional, so emotional to handle. Because they are not able to handle it emotionally, people want to come into system trading, right? So is that a right way of thinking? I should say, like, because they are not able to handle it emotionally, they are coming into algorithmic trading. It's again a dumb behavior. I should say that one should not see algorithmic trading is going to increase your. It is going to increase your efficiency. Let's say you are a manual trader, you practice the system trading efficiently, and now you want to jump into algorithmic trading because you are able to get a better price, and it's more efficient because it is going to you're going to punch exactly at the price where you want to get, right? So that's where the algorithmic trading comes. If you want to increase your efficiency, then only you have to go for an algorithmic trading. So I'm a system trader. I aware about the risk involved in it. I know a system cannot make money for 3 or 4, 5 months continuously. I know aware about my system trading returns. I'm aware about my robustness of the trading system. So now I want to automate this. Then that is the right way of thinking, right? If because of you are not able to emotionally handle it, you want to leave it to a machine, and you want that machine to generate returns. It doesn't work that way. Algorithmic trading doesn't work that way, right? So prior to that, you should have some sort of vision. What kind of trader you are, what sort of strategies you are going to make, and is that strategy scalable? Let's say tomorrow, if I'm going to implement the same strategy with some bigger money, let's say like a crore of money, or two or more than that, will that strategy works in every sort of environment or not? Will that strategy scalable or not? There are certain strategy which works with little money, let's say 1 lakh or 2 lakh, it may work. But if you are scaling up on a huge factor, let's say you want to place that same strategy, you want to place 1,000 orders or 2,000 orders, the system behavior will change, because whenever you are trying to punch huge orders in the system, you will be getting an impact cost. Impact cost in the sense, because you are punching a huge order, you are moving the market order to some extent, and you will not be able to get at the price where you want to get. You will be getting at a little bit of bigger pricing, which involves a little bit of cost to you, but in the longer run, it impacts your behavior. And your system behavior will also influenced by your brokerage. Maybe if you are placing orders late, post your signals, you want to wait for some 5-6 seconds. Once you see in the signal, you want to place it manually. It may take 5 to 6, 7, 8, 10 seconds, right? To realize that the signal has came and then you want to place the order. If you are really quick, it's fine. But if you are not quick, then it again impacts your behavior, your system behavior, right? And again, if you are a positional trader, what sort of trading system you are going to adapt? What is your holding period? If your trading system is continuing for beyond your trading period, what you are going to do? All those things you have to pre-decide before trying to jump into the trading system. You cannot do an system trading today, intraday, and tomorrow you want to do carry forwarding suddenly, and you are trying to take a manual decision. That will impact your trading system behavior largely, right? So if you are doing intraday, just leave your trading system to allow to trade only intraday. Because your that particular day at end the losses, you don't want to cut off your position, you want to hold it, then you're trying to violate your own system trading rules, right? So based upon your what kind of trader, you have to frame your rules accordingly, right? So if you are an intraday trader, then you have to figure it out what time I'm going to exit. If there is no signal for that particular day, what I'm going to do. If the signal came and the entry signal came and if the exit signal haven't came till 3:30 or 3:25, what I'm going to do? I'm going to cut off my position, or what I'm going to do, right? So those kinds of things you have to decide. And based upon what kind of trader you are, right? So you have to have again a realistic expectation about the market. If you're an intraday trader, every day making a 1% return is closely impossible at retail standards, right? Especially with if you're going to use with some system-driven models and you want to make some 1% or 2% consistently out of your capital, it's not going to work out. But people in this market have a different expectation. They want to generate 10% returns every month, and there are a lot of people who have an unrealistic expectation. Like they want to make a 30-40% in a month, and some people simply they want to generate 5% returns. For them is enough for a day. That doesn't work that way. People are having a so unrealistic expectation. They have to understand. Unless they are not going to understand it, it's really tough to understand the markets. Right. So what matters here when it comes to system trading, you need to have a very good emotional quotient. So emotional quotient is where how you are going to react emotionally. If you are reacting emotionally to your trading system, then again you're done. You're done with your trading system. There is, emotional quotient comes when you are able to understand about the nature of your trading system, right? So the more and more you're able to understand the nature of your trading system, you will be able to handle your trading system emotionally, and you need to have your strong belief about your trading system, because end of the day it's again going to be a very simple rule, but you need to have a strong belief that the system will make money in the longer term. You have to look in the longer picture. Whereas say you are going to see a very shorter picture, and you are starting a system and which looks good in the backtest, but you are starting it right away and you are experiencing 4 continuous losses or 5 or 6 immediately, and we started doubting the trading system. We started doubting this trading system and saying like, "Arey yaar, ये trading system काम करता है क्या?" No, right? So if you're asking such questions yourself, then there is no belief in your trading system, and better at the end of the day, again you try to wind up. And quality trading, quality data feed, it matters a lot if you are a professional trader. If you are a learner, it's fine. You use any data feed, it's fine. Your free data feed or not. paid data feed or an legal vendor, illegal vendor, anything is fine. But if you want to do something professionally, it's always recommended to go with authentic data vendors. They are slightly costlier compared to the illegal data vendors or the free market solutions, right? So it's recommended to go with the data feed because data is a critical element when it comes to trading systems, right? And the brokerage has a greater impact when it comes to your trading systems. If you are going to use a low cost brokerage, your trading system behavior will be better. Whereas if you are going to use the traditional brokers, the premium brokers like ICICI, Sharekhan, or any percentage based broker basically like HDFC or the Reliance Money, your trading system behavior will be completely different in the longer term. At the end of the day, you may think like most of your money had gone in your brokerage, service tax, slippages, right? And your system had made peanuts compared to the cost which you incurred, right? So anyways, we'll try to cover all those things. We'll try to understand how much brokerage is generating. We'll try to backtest a strategy with both percentage based models as well as with fixed trading like this Zerodha TradeZilla kind of models where the 20 rupees per order or 1 rupee, 9 rupees, 10 rupees per lot. We'll try to do a backtesting on all sort of trading commissions, right? And generally, a low-cost brokerage is preferable when it comes to systematic trading. Otherwise, in the long run, you will be feeding to the server, you'll be feeding the broker, you'll be feeding the data feed vendor, you'll be feeding who else? The government, right? You'll be feeding everyone, and at the end of the day, you get peanuts for your efforts, right? So it's better to go for a low-cost brokerage solution and better to have a lower impact cost. Lower impact cost in the sense, let's say you are going to place a huge order. Don't try to punch an order with an 1,000 lots or something like that. If you are having such, if you are going to have such, if you are going to have to trade such a huge quantity, then break down into pieces and then execute in parts, right? So you need to have a better execution mechanism to handle to get a lower impact cost. Otherwise, your impact cost is going to be very huge, which anyways you may not include it in your backtest report. But when you try to add your impact cost to your existing trading cost, the system trading behavior deteriorates, right? Again, that's what I said. I mean, the same model which works with an lower money may not work with, if you're having a bigger money in your hand. The system trading behavior will completely different than your the system is behaved within 3, 4, 5 lakhs of money, right? So if you are going to have thinking in long term in handling a bigger money, and you have to think in the design front that whether your trading system is scalable or not. Can I use the same system to make money within a bigger size, or if the system is capable of running only small portfolios, right? So you have to ask in that line again. And better money management. We'll talk about a couple of money management and how to implement money management in AMI broker as well. We'll try to focus on that. So trading softwares, we have all sort of complex trading softwares available even at the retail level. We have AMI broker, NinjaTrader, multicharts.net, eSignal, MetaStock, MetaTrader, WealthLab Pro, and the list is so long. I'll just mention only the popular trading analysis softwares, right? So which one I have to use it? Should I have only AMI broker or should I go with NinjaTrader? Right? So it depends upon where is your skills. If you are, say, if you are a programmer and if you are familiar with .NET, then I'll advise you to go with NinjaTrader or a multicharts or a multicharts.net, right? So NinjaTrader and multicharts, has a programming language which is mostly driven by similar to a .NET programming. If you're already a .NET programmer, then learning a Ninja Trader and multi-chat platform is going to be a lot easier than any other trading platform. Whereas, say if you're a non-coder, then even a coder can get into the complex stuff with Ami Broker or MetaStock, but from a non-programmer perspective, it's easy to adapt to that particular platform. You can easily adapt to an Ami Broker or MetaStock. Or let's say you do well with e-signal, in that case you can adapt to an e-signal. Or let's say you want to have some premium indicators, there are a lot of third-party premium indicators you want to go with that, then you can use softwares like e-signal or Market Delta kind of softwares, right? And TradeZilla Pro, again, .NET driven based, and MetaTrader, similar to C++. So if you're familiar with C++, then it's better to go with MetaTrader. It's not like you have to use only Ami Broker to generate money here. You can use any trading analysis software, whichever is comfortable to you, right? So here in market calls, I generally use Ami Broker and Ninja Trader for the software purpose, and Ninja Trader is completely for discretionary trading. I generally used to watch only market profile, whereas Ami Broker I used to have a lot of system trading models, and I used to have a lot of indicators, system-driven indicators. Of course, the trading indicators as well. So I use a mix and match of both Ami Broker and indicators simultaneously. And when it comes to data feed, I use global data feed as well as e-signal. One of my machine uses e-signal, and another machine uses global data feeds. And so I use Ami Broker Integrator and e-signal and global data feeds. Whereas when it comes to data vendors, there are a lot of free data vendors available, right? So Ami Broker itself supports a tool called Ami Code, where you'll be able to import data from Google Finance or Yahoo Finance. And if you have an Ami Broker license, you'll be able to get intraday data. Intraday data in the sense it updates every 1 minute. It is not an it's not a real-time data, but it updates every 1 minute. But whenever it is updating, it's real, right? So you'll be able to get only the cash market data. But the problem is the Google Finance or the Yahoo Finance data is not so reliable when it comes to third-party feeding data to the third-party products like Ami Broker, right? So you cannot highly depend upon, but from a learning point of view, you can, to some extent, you can use the UOD data and intraday data to trust, but it solves the problem at the learners level. But as at the professional traders level, you cannot depend on the EOD products. If you are looking for some EOD products, I would advise you to go with something like an Equal Solution or Viratech. These are the two vendors who are providing EOD data for Ami Broker and MetaStock. So, but they charge a little, and Equal Solution charges 2,500 rupees per year, and Viratech charges somewhere around 10,300 per year. But the quality of the data is really great because when it comes to EOD data, your data has to be adjusted to split, bonus, dividends, right? So these vendors take care of it. Whereas the Google Finance or Yahoo Finance, whatever you're watching over there, it's not adjusted to splits or bonus or dividends, and you may get a different results when you're trying to backtest your strategy with an non-adjusted stocks, right? So generally, if you want to do any sort of system trading with end of the day data, you have to be well aware about that, about whether your strategy, whether your data has been adjusted to split or bonus or dividends. In that case, you have to go to the next step. Whereas again, as I said, it's all only at the learners level. Again, if you have any free ASCII data, generally most of the forums used to circulate. You can get the data from a TradeZilla kind of forum where people used to post the ASCII data every day, and you can be able to import that in your trading software like Ami Broker or Ninja Trader. So ASCII generally a simple text file or a CSV file which holds the open, high, low, close, symbol name and data of the particular script or the entire script for that day, right? So There is also a QuantDL plugin. At this point of time, I think it's available only for AmiBroker license holders. So if you are an AmiBroker license holder, then you'll be able to use QuantDL. You'll be able to connect to QuantDL. QuantDL is it's an the biggest dataset library. They have both premium and uh, free library as well, where you can able to import any data from their portal within your AmiBroker. So QuantDL is an interesting financial dataset tool. I would recommend everyone to go and check it out what QuantDL is all about if you haven't heard about what QuantDL is all about. Right. So a lot of free stuff, but all these free stuff are meant for learners. When it comes to professionals, I mean, it's recommended to go with, as I said, it's recommended to go with data vendors. Like there are a lot of data vendors here: Global Data Feeds, NeoTrade Analytics, eSignal, True Data, and there are brokers providing the data. Not in India. India, who are providing, if the broker is providing data, then it's more likely an illegal data, because none of the brokers are data vendors, right? So you have to understand that brokers cannot do a data vending business. And if the data vendors has to do a data vending business, they have to have some tie-up, or they have to acquire the company, data vending company, authentic data vending company, and or they have to be an data vendor. There is one data vendor here. I mean, they also act as a broker. I guess you know about Interactive Brokers. It's a US-based broker. He is a broker, as well as he can feed the data from his trading terminal into your AmiBroker, right? So if you are looking for some better option, you can try out Interactive Brokers, where you pay brokerage for the broker, as well as you get a free data feed, right? And these global data feed, NeoTrade Analytics, True Data guys generally supports all the major platforms like AmiBroker or eSignal or MetaStock older versions. And if you understand eSignal is itself a trading analysis platform similar to AmiBroker or NinjaTrader, whereas they are also a data vendor as well. They provide data to their own trading terminals, trading softwares. Also, you can use the data feed to connect to any popular trading software like AmiBroker or NinjaTrader, or let's say multi-charts. You can use eSignal as a platform, or also you can use eSignal as a data feed platform to connect to any popular trading analysis software. You name any popular trading analysis software, it can be integrated with eSignal, right? So eSignal gives you comfortness, but comfortness comes at a greater cost. And I'm generally paying close to somewhere around $300 every month to eSignal for the platform and for the data. And global data feed, my cost comes around somewhere around 2,200 per month, and this is the data feed cost, right? So, but there are low cost data feed vendors as well. I'm not sure about the quality. You are free to experiment with your any data vendors, right? But it's preferably better to stick with authentic data vendors. There are a lot of data vendors who are giving at 300, 200, 500 rupees. You cannot expect any greater quality from them, right? Maybe they can provide you a greater service, but they cannot provide a great quality data with a zero delay, right? So if you want any zero delay kind of data vendor, it's better to stick with authentic data vendors. And if you have any doubts, you can ask me the doubt right away here. Okay. So do we need to consider the auto trading platform like Symphony, etc. for system trading? Is it benefit for retail trader? So that's what I say. I mean, before you are approaching any vendors like Master Trust or Symphony for system trading, you try to understand what sort of trading system you are going to use, or is auto trading making your system automating it make sense or not? Because if you are approaching any third party vendors like Symphony Fintech or Master Trust, and again there is a fee involved for their trading solutions, right? So again, you're going to get an extra cost. In my case, let's say I'm going to have a strategy which is going to generate only one trade per day, and then I have to seriously think, should I have to automate this or not? Or let's say I'm having a portfolio of strategies, I'm going to have some 4 to 5 strategies. Manually, it is going to be really a tough job for me to execute. Then I should consider going for a systematic trading. I mean, I should consider using algorithmic trading platforms. Or let's say I'm just going to have some portfolio of 10, 20 stocks, and I'm going to automate this because I cannot handle it manually. I cannot, because the strategy is going to have at least some 20 to 30 signals in any given day, and in that case I'm not able to handle it manually. Even missing one opportunity is going to cost a huge for me. In that case, automating your trading system makes sense. So there is nothing wrong in considering platforms like Symphony or Master Trust, but you have to think, is that your real need? Or because you have emotions and you're going to automate it and so that your emotions will be removed? No, definitely not, because your system is going to trade automatically and you're going to measure the portfolio every now and then, and you cannot handle your emotions, you are likely to switch off their machines, right? So if you're not able to handle your trading system emotionally, better don't come into algorithmic trading, because even doing an algorithmic trading involves a lot of emotions. You'll be watching your portfolio all the time, and one fine day you will switch off your trading system, right? I guess Dinesh, that answers your question. And Dinesh is one of my past student. So he does a lot of AFL freelancing. So if you have any AFL freelancing requirement, anytime you can contact Dinesh. Dinesh, I mean, he's already had some enough expertise with AFL Amic Broker codings, right, Dinesh? Yeah. So Dinesh is TR Date, Dinesh Date from Pune. Okay, so let me get back here. So there are different types of trading system. I mean, most of the people love to trade on trend following, especially, and if you are an fund, I mean, mostly trend following systems are scalable to some extent, and people love to do trend following across different time frames. I've seen a couple of people do trend following at 5 minutes, 10 minutes, hardly. Even there are people who are following a mechanical trading system on the daily charts as well, right? And trend following, it's quite easier. The adaptability is very easier because it's going to have some very few rules, not an complex stuff to be followed. Whereas mean reversion, it's going to be slightly tricky. It will have a higher win rate, right? It will be having a higher win rate, but most of the time it is going to eat peanuts. Whereas the trend following, it loses most of its game. Whereas if you take any trend following systems, none of the trend following systems in the world are not going to have any 70 or 75% of accuracy, right? So if you are having a trend following system which is going to have an 70-75% of accuracy, then seriously you have to doubt about the nature of your trading system. Something is wrong with your trading system, because if you follow any trend following model, so it's a mix and match of you're going to long and exit, long and short sort of models. Generally, at lower time frame, any sort of trend following models, it's going to have a winning ratio around 35 to 40 or 45 percentage at the lower time frame. Maybe at the higher scale, you may have a winning ratio around 45 to 55 or 60 percentage, max to max. I'm talking about trend following models, right? So these models are just going to control your risk and allowing the trend to continue and if the risk reward ratio is going to be better, then I cannot say like you cannot get a greater risk reward ratio by following a trend following model, but a fair, anything fair should do fine when it comes to trend following model. Even with an 35 or 30% winning models, you may be able to generate returns, but here the percentage of winning games doesn't matter, especially when it comes to trend following, right? How consistent the strategy is making money slowly and consistently, that matters. The consistency matters here when it comes to trend following, whereas your winning rate is nothing to do with this sort of trend following models, right? So you need to have a realistic idea what you can get from a trend following model. Are you comfortable with trading a 40% winning ratio? If I say 40% winning ratio, it means out of every 100 trades, you are going to lose 60 trades every time, and you are going to make only 40% of your trading time, right? So 40% of the trade you make money, and rest of the 60% you lose you're going to lose your money, you're going to pay your brokers. Are you mentally prepared for that when you are trying to follow trend following sort of strategies? Because emotionally it is again going to be an huge thing. Even if you are going to follow and you are going to automate this thing, it's really going to be an painful activity at some period. Some people, some certain times it's going to be very rewarding, but whereas there are zones which is going to kill your patience, and it will make you exit from an even if the strategy is going to make money for you in the longer run, right? So trend following, it's in the long term, you have to think from the long term perspective. It's going to make, definitely most of the systems, trend following systems are meant to make money, but there are risks associated with that. Most of the time, if you're not aware about the nature, or if you're not aware about what sort of money management I have to follow for a particular trend following, you may be forced to liquidate from following such strategies, right? So again, the strategy, the afternoon session focus most on the trend following strategies. Mean reversion, it's slightly tricky, and especially it is risky when it comes to high volatile environments. Most of the mean reversion trading systems have, any sort of mean reversion trading system is going to have an higher winning rate compared to the uh, trend following. Maybe you can generate an 80-85% winning ratio also. Even you can have a 90% winning ratio systems also in mean reversion. But there are times, most of the times, even a 90% winning ratio will not generate any consistent money over a period of time. It will not create any wealth for you. What I'm saying is, you cannot make money even with a 90% winning ratio. Ultimately, the winning ratio doesn't matter anything over here. So let's say I can give you an very simple example. Let's say you want to have some EMA crossover. You understand EMA crossover, like a very simple EMA crossover. Whenever there is an EMA crossover, you are going to buy. Positive EMA crossover, you are going to buy. Whenever there is a negative EMA crossover, you are going to sell. Right? If you are just trying to play with this sort of trading strategy, let's say at a hourly time frame, maybe your winning ratio will be around 20 to 23, 25%, right? So now you got a trading strategy with 20 to 25% winning ratio. Let's do one thing. Let's reverse the strategy. If there is a positive crossover, you go on short. If there is a negative crossover, you go long, right? So now what is the winning ratio now? Your winning ratio becomes, it's not 25%, now it is 75%. Now it is going to be 75%. So can I make consistent money with that 70% or not? No, it is not. It is what it's going to have is, you're going to have a very serious risk. You're all the time you're going to eat peanuts, and you're going to make bigger losses if you're going to follow the rules straight away. So even in 75% or 80% or 90% systems, if it is going to come up with an associated huge risk, then it doesn't make sense to follow any 75% 90% winning ratio. Again, as I said, even if it is having a 75% or 90% winning ratio, it doesn't mean like it is having any predictive power. you're just eating the peanuts and you're going to lose the bigger game. And whenever you're losing the bigger game, it will be 10 times of the money you made from your last 10 trades or 5 trades or all. So again, are you really trying to eat peanuts, or you are looking into the bigger picture? Makes sense here. And the statistical arbitrage, I mean, there are very less practitioners over there, and generally statistical arbitrage refers to pair trading. Especially people love to take the money from the spreads between two stocks. They tend to play two stocks from the same sector. They go long in one stock and they do short in another stock. And yes, statistical arbitrage is one of the institutional strategies. Most of the institutional strategies love to go for statistical based models, especially I mean, most of the funds, hedge funds, have a love with statistical arbitrage techniques. Mostly they use portfolio-based statistical arbitrage techniques to go with that. And I mean, of course, at retail level, the tools are very limited. Whereas if you are very good with programming language with Python or R, you can design an interesting statistical arbitrage techniques. Whereas with commercial softwares like Ami Broker or Ninja Trader, the scope is very limited, right? So when it comes to discretionary trading system, I mean, you're going to have an human decision making involved. Of course, I mean, you can also say like emotions are there. And in case of mechanical emotions, you are giving the rules to the system to decide when to buy and when to sell. Absolutely, there is no human decision making. Just that the human, even if he is going to do mechanically, he is just going to punch the order whenever the signal is going to arrive. Right, so there is no human-based decision making over there, and yes, you cannot avoid emotions even if you are going to trade mechanical trading system. So it's again a clear personal behavior. If you want to remove emotions from the market, it's the you who have to understand. You have to understand yourself and the markets. Then only you can remove your emotions. Otherwise, it's really going to be an you're going to sail a boat in tougher wind conditions most of the time, right? So try to understand, are you capable of understanding this market better to sail in this market for a long term, or you're going to emotionally getting hurt every time, so that I mean you may not able to make any solid decisions in this market. So try to improve your emotional quotient. There are a lot of tests available, online tests available there to understand what is your emotional IQ. So like IQ refers intelligent quotient, right? Something similar to, there are a lot of EQ tests are there. You can take online and you can understand what is your EQ score is, right? So try to take a EQ score test and then try to understand, are you emotionally capable to handle this market or not? If you're not able to handle it, then you need to do some sort of practice to handle the complex situations emotionally. Generally, humans are not programmed to handle complex situations emotionally, when emotional situations. So try to take some EQ tests so that you will understand where you stand, right? Okay. So as I said, the disadvantage of trend following, it always lags the trend. So this happens. So I generally used to follow most of my trend following models, and I used to compare with the people who are doing taking the entry at the same time using market profile techniques. So always used to get, like, before I am going to get any buy or sell signal, they take the better price at the bottom. Right, so that is where I am able to always see that I'm lagging always the trend, and there are people who are following the concepts like market profile. They're able to get a better price. So if you're going to use trend following models, you are always going to lag the trend, because you are going to follow some swing trading techniques, or you're going to follow some models which are always going to, your entry is always at the breakout, right? So your entry is always at the breakout, and probably you've seen the market behavior post the breakouts. Most of the breakouts ends with a failure, and some of the breakouts extend for a prolonged time, right? So you will be tend to lose in those post the breakouts. You will be tend to lose in a sideways market, and the prolonged trend is where you are the one where you are going to make a bigger money in that prolonged trend post the breakouts. So again, clear disadvantage is going to be there when you're going to follow a trend following models, and whipsaws is going to be there. I mean, like any other trading strategy, or trend following is going to lose. Sometimes it may lose some 8 to 10 or even 13 consecutive losses. By that time, how much you are going to lose in terms of money, it matters. From say, let's say there are some 12, 13 continuous losses. You are trading and you incur 12, 13 continuous losses, and because of that, you lost just 15% of your portfolio. Then I would rate your trading system as a very interesting trading system. Then you should continue your trading even because of your 12 continuous losses. You just made 10 to 15% of your losses in your portfolio. And extreme volatility is dangerous for trend following. It's dangerous, and also it makes more money, especially in the high volatile environments. The trend following system makes most of its money in high volatile situations, whereas your risk, in the sense your trading system behavior will behave differently. You'll be making more money, but equally you will be associated with a higher risk as well, right? So suddenly, let's say you'll be making 30% returns in 15 days on your total capital, and next 15 days you'll be losing 25% of your returns. So your equity curve will be very volatile as the market goes volatile, right? So at the end of the month, you may still end up with making 5% returns in a high volatile environments. So your equity curve also goes volatile in the market goes volatile. So it's quite dangerous, because there are times you'll make 20% returns in the past 10 days, and the next 10 days you'll be losing 40% of your money. So again, volatile is so crazy and dangerous, especially when the volatility, if you're going to adapt for any trend following mechanisms, at the high volatile zones, we generally tend to make lower bets, and we increase our bets when the volatility gets down, so that the risk will get avoided. Yes, that impacts on the other side, it impacts your portfolio as well, but it always advisable to take an lower bets when the volatility is going to be very huge, and emotionally also it's really tough to handle under extreme volatile conditions. So mean reversions, most of the time you are able to get a better price, but if the strategy is really poor, you're going to eat peanuts, and you're going to use and you're going to lose a bigger downside. And especially if you're carry forwarding your mean reversion trading strategies, if you are having a position and you are going to carry forward, then a gap up and gap down poses a bigger risk. And whereas if you are trying to build any models on intraday, if you're trying to build any models, then I would say like you should try some sort of a mean reversion models. Trying to attempt any trend trading models might be disastrous if you're going for any sort of an intraday trading strategies, right? So practically I haven't none of my trading strategies are intraday trading strategies. However, we'll be looking into some of the prototypes, how to build such models, especially intraday, and how to build models on based on end of the day charts, or how to build the models if you're a positional trader. So all those scenarios we'll try to go through that, right? So unlimited downside will be there. I mean, there are times if you're going to handle a stock next day, I mean, you're going to carry forward some, let's say you're going to carry forward some longs, and next day you're going to have a big gap down, 20-30%. There's a potential 20-30% drawdown can happen overnight. So again, the bigger risk is there. Of course, it's there with the trend following also, but the unlimited downside risk is there with mean reversions models. It's slightly riskier than trend following, but one thing you get is you'll get a better winning rate, but your returns may or may not be as good as your trend following. So various stages we focus while doing an trading system design. First we'll try to get into the analysis mode, and we'll try to convert our trading thoughts into plain English, and then from plain English to mathematics, right? So once you convert everything to mathematics, we'll implement in the design phase, we'll try to implement your design thinking into AFL codes or your programming trading system codes, right? And at the implementation phase, I mean, once the code gets converted, we'll be doing some testing. The testing refers optimization, back testing, walk forwarding, all those kinds of things, and then evaluation. When it comes to evaluation, we'll try to do two kinds of evaluation. One is an live forward testing. We don't go live in the market, but still we do forward testing. What if I implement the same strategy in the live market, what I'll get? So it's a kind of a simulation, and we will also test the robustness of the trading system. We'll do some Monte Carlo analysis or walk forward analysis. Monte Carlo is an efficient method to check whether a trading system is robust or not. It will say whether a trading system is good or bad. It will tell you whether it is robust or not. Is it able to adapt under any sort of complex conditions? Those sort of inputs you will be able to get when you are trying to do Monte Carlo analysis, right? So system health, you have to monitor the system health from time to time, and your time defines system health. What is your holding time period, and what is the ideal how long you are going to monitor your system health? If you say if your system health is going to deteriorate for some 4 to 5 days, what sort of action you are going to take? And let's say your drawdown is going to be more than 30-40%, what you are going to do? And are you losing confidence in your trading system? So all the system health you have to monitor it on frequent basis. Probably revising your trading system health every 3 months or 6 months would do better, right? So otherwise, if you are checking your system health for every now and then, and it's not a right way to deal with that. I request, if you are doing any system checks, whether your system is performing good or bad, try to have a track record of your trades, and try to analyze your equity curve, and try to get more input from the trading data points. And equity curve, again, I mean, no one likes this equity curve, especially because the system is not making money consistently here. If you understand, equity curve says how your money is growing over a period of time when you are following a certain set of rules, right? So here you can see the system started with 1 lakh of money, and suddenly it went down to 70,000, even below that. Once again came back, and once again it's moved into sideways mode. It haven't made any money for almost how many years? 1, 2, 3, 4, 5, 6, 7, 8 years. First 8 years it haven't made any money, zero, right? So after all the money has happened in the next 3-4 years of time. So no one like this sort of trading system, right? If you're going to follow any trading system randomly, or you're going to follow you're visually seeing some trading system, and you have some instant faith in that trading system, and you don't get any solid returns because you never backtested the trading system, and you never realize the equity curve behavior. Like most of the time, you're not going to get a straight equity curve line, and so studying an equity curve is going to be a real key thing when it comes to system design. So everyone loves to have a straight, slanting, smooth line, like your money is going to keep on growing forever, right? In reality, it doesn't happen so. You're going to have drawdowns, and there are certain drawdowns which is going to hurt you emotionally. So drawdown is something like this. So I can show you like you can see some underwater. We also call this as an underwater or drawdown. Drawdown tells you at some point of time how much you lost from the portfolio point of view. So this gives you a picture like at some point of time this here. So you started the trading system around 2000, and within 6 months or 8 months you got a drawdown, and there you lost your 36% of your money, right? So are you willing to follow a trading system which is going to give you 36% of drawdowns and it is going to recover, and again it is going to remain in sideways? So those sort of understanding you can get out of it, but all those things are just an understanding. So understanding doesn't mean that you have knowledge about the market. Because you have such an efficient trading system, say like your trading system is going to give you 5-6% drawdowns. When you backtested it, it given you 5-6%, it doesn't mean like it will give you the same behavior in the past future also, right? So your knowledge is not equal to understanding here. Understanding the market is completely a different, it requires a complete different skill set. And yeah, let's say you're going to lose a bigger chunk of money. So this particular picture shows, let's say you have a drawdown of 10%, right? So again, to recover back, you need to have to generate at least 11.11% drawdown. And let's say you are going to lose 20%, you are going to start your trading system right away and you are going to lose 20%. And to recover back, your trading system has to make back 25% to come to a nil position, right? So let's say you're going to have a trading system loss of 30%, the system has to make 42% returns back. And if you're going to if you're going to lose your capital more than this, then you have to seriously think about trading that such system. So I should rate like any system which is going to have an anything above 30% of drawdown, then seriously you have to consider either to do right allocation or not to leverage too much of money, so that your drawdown will be always under control, or better don't have any strategy which is having an, better don't try to follow a strategy which is going to give you 40, 50, 60, anything above 40% returns. It's really going to be an your recovery time is going to be more. So better try to limit yourself, try to figure out a trading system which is going to have an drawdown less than 30%, right? So that is again going to be a key thing here when it comes to system design. Otherwise, it's going to be emotionally as well as time wise, it's going to be a painful thing to have a recovery time. Let's say you are going to have a 50% drawdown, you have to recover 100% of your money, right? So it's seriously an you have to find a multi-bagger kind of strategies to double your money again back to where you initiated your capital, right? So it's again a painful task. So the goal is, if your system is making 30% loss, just shut down the system and then move to the next one. Don't stick to that. There is no point of sticking to that. If it is going to deliver more and more losses, then you have to recover more and more money back. And any system which is going to have less than 20% drawdown, I will rate that system is going to be good. And any system which is going to have 10% drawdown, it's going to be greater. So I can design a trading system with 10% drawdown very easily, okay? Because I can allocate more capital, but I'll allow I can take very small trades on top of the capital, so that the drawdown will never exceed the 10%. It's very easy to make that from a design point of view, but by doing that, are you getting an enough risk reward ratio? Is that the one you have to monitor? Right? Designing a 10% drawdown or 20% drawdown is not going to be a greater thing, right? Because we can allocate our capital based upon that, and we can get a 10% or 20% drawdown. But are we going to get an enough yield, enough returns out of the trading system is what going to think about it. Is it worth enough to trade such trading system, even if it is having a 10% drawdown or 20% drawdown? Is what you have to think in that line, right? So any trading system which is going to have a high risk, high reward with an 10% of drawdown, it's an excellent system, and anything which is going to have very less than that, again I would rate that as an interesting trading system, right? Anyways, we'll focus again more on equity and drawdown in the afternoon. And system expectancy, as simple as that, we have the formula here. I'm not going to read it out. And what I can tell you is, if the system is going to have a positive expectancy, your system will make money. If a system is going to have a negative winning ratio, negative expectancy, your system is going to lose over a period of time, right? So system expectancy is a measure. If it is positive, you make money. If it is negative, your system is not capable of generating returns. Fine, and so always keep an eye on volatility, because as I said, volatility changes the behavior of your trading systems. Try to have a picture on VIX. Try to close. Try to focus on VIX to the close. Try to understand. Try to correlate when the VIX is increasing, how your trading system is behaving. Is it behaving normally or differently? How about an highly increased VIX, like during election results? How it is behaving? How your system is behaving when there is any fundamental news announcement is going to come, how your trading system is going to behave. Is it going to behave bizarrely every fundamental announcement? Then you should think about making a ban. There is no trade zone during any fundamental announcements, right? So seriously, you have to give a thought on volatility front. So is it really worth enough to trade at an high volatile environments, or should I have to trade only in low volatile environments? And rest of the high volatile environments, I should stay away. Especially if you are a mean reversion trader, you should not trade yourself in high volatile environments, right? That high volatile environments kill a mean reversion trader, especially if he is a positional trader. And a trend trader, he can adjust himself with an portfolio, whereas mean reversion bets are not suit for an high volatile environments, especially when it is systematic. Discretionary, it may or may not sense, but most of the mean reversion trading system has huge risk when the volatility is going to be really high. And yes, of course, listen to market dynamics. Learn to listen to market dynamics. You cannot, if you are an evolving system trader, you cannot evolve just by going with the rules. Doesn't give you the real edge. The real edge will also lie on the factors like volatility, understanding the key market participants, macroeconomics, currency, commodities, global market sentiments. Right. So there is an abundant edge is lying over there, but the thing is, you have to focus rigorously on how to use these factors effectively into your trading systems, right? So just by following the rules, you may not get the right edge, but just by looking into certain external factors and you're applying filters which make sense. A filter which makes sense definitely going to cut off most of your bad trades, right? And it will allow your good trades to continue, and it will cut off most of your bad trades just by looking into any factor which you can use it as a filter, right? Let's say I can give you some examples, like let's say if there is a global market sentiment, there is a strong global market sentiment, then there is a big gap down, and you can put up further ban to trade for that day, or I'm just talking on just giving examples over here. Or you can practice and mechanical trading systems, especially let's say when the macroeconomics picture, when let's say when the PE ratio is going to be about 25 or 28, you want to practice only long, short only trades, and when the PE is going to go below 15%, you want to enter only long only trades in Nifty. Those kinds of things I'm talking about. You can try to combine fundamentals as well as technology, technicals along with fundamentals, and you can create a right filter that if you are able to see some edge over there, absolutely fine. And all these factors are lying discretionary, and your right understanding gives you the right edge in the market. Just by blindly going to trade the rules, then it's just an you're trading a black box where you don't know what the outcome is, when it is going to trade long, when it's going to trade short. Absolutely, you don't have any clues about it. But if you have enough idea about the market dynamics, most of the times you can avoid the wrongdoings, and most of the times you will allow your good trade to continue without any. You can put a right filters for your trading system. You can choose right filters for your trading systems. Right. So again, trading system adoption. So this is a concept which is applicable to any field, not only just trading. It applicable to any industry, right? So what I'm showing you is an innovation diffusion model. If you just Google it, you'll be able to get a lot of case studies, research paper on this model. It's called innovation diffusion model, right? So when a clear trend is emerging, the innovators are the one who starts the trend. Or if you want to talk me from the market perspective, they are the one who is going to enter at the market, especially at the bottoms when someone is trying to invest in particular shares. The innovators are the one who catches the bottoms or at the tops, and then comes the early adopters. The early adopters are the one who understand that yes, the trend is young and it's developing, so we have to enter it. So let's say Apple. So when Apple is announcing a product, right? Let's say when Apple is not so popular and the people started using Apple products, right? They are the one who are the innovators. The innovators who first give a thought. Later, people think like Apple product is interesting. Then again, a set of crowd moves in the very early stage. They are the early adapters for the Apple products. Then comes the early majority. Then you started the trend start building up and still young, and you see a pattern, and like more and more people now started jumping into adapting Apple products, and then comes the early majority, and you see a breakout there, and you can see more people. The rate of adoption is very faster, and more people now started loving Apple products, right? Then comes the late majority. They are the one who sees the TV news channel. They seen the product interviews and then demonstration. Then they find that their friend is holding. Because of that, they want to hold. Right. So the late majority enters very late after reading the newspaper reviews. They enter the trend very late, basically. Right. So and laggards are the one who want to have it because their nephew is having, or their neighbor is having an iPhone, so they want to have it because they have a craze in that. Or so they are the one who is very late to the trend at the top. And likewise, let's say someone is there is an earning announcement. There is an earning announcement today in HCL. Let's say like the stock jumped 10%, and the guy who is watching the news or newspaper, anyways, he's going to read the same news on the very next day, and so he got some idea like HCL company is good, and so he want to jump into intraday longs to test some longs. So already 10% in HCL is already made. Now he want to do some intraday trading, and he want to enter into the trend because he thinks like HCL is an interesting company, and company had delivered returns 10%, and yesterday it made some returns of 10%, and he expect the trend to continue. He is the only one who is going to enter into the trend very late. So most of the laggards enter very late to the trend. So this behavior is there in every other model. So where your strategy fits in, is your strategy going to have a higher rate adoption? Then it is going to have a very serious rate adoption. It's very easy to adapt, doesn't require any major skills. Then you may be coming under late majority or laggards, right? So if your strategy doesn't require any huge skills to learn, then you'll be falling under late majority or laggards. Whereas if you are trying to design something innovative, or you're designing something which is not easily accessible in the market. No one is trying to have such methodologies in the market. You may fall under early majority or early adopters. So if you ask me, the concepts like harmonics or the things like a market profile doesn't comes under late majority or laggards, because it takes a lot of patience, it takes a lot of time, your trading experience to a lot of workout, a lot of screen time to practice and then make things picture perfect. It takes a lot of time to evolve yourself. So we focus on those sort of concepts where your edge is really going to be there, right? So anything which is easily accessible, I mean, there is an doubt about the trading edge over a period of in the longer run. And I guess you have some design thinking ideas. I mean, I haven't made anything theoretically here, but from the practical perspective point, these are the goals you have to look out for. Otherwise, I mean, I can spot you n number of books where you can go and read. Okay, so in system trading concepts, this is a word from Howard Bandy. Howard Bandy is a professor. He's the one who written a lot of books related to having broker and system trading concepts. He says once the system trading is broken, it is broken. So don't try to fix it. Don't try to enter a trading system. Let's say you are backtesting a trading system and that trading system had given 30% drawdown. And since it has already made a 30% drawdown, from there you are expecting for a reversal. Don't ever try to attempt such trading system, because most of the time a trading system once broken is broken. It's not working because the nature of the system itself had gone now. There is no point of trading such systems. So don't ever try to fix it. Don't try to optimize such trading system and then trying to use it again. If the system is not working, it's not working. Just leave it and get out and try to look into the other systems. Don't try to fix a broken system. So there are some people who will ask, the system is having a little late entry. Can you give me signals little 1 bar earlier? Can you do some modifications so that the system will deliver you 1 bar earlier? You cannot, because you cannot fix any system to generate a return or to generate a signal 1 bar earlier or so. Like you are trying to tweak it. Once again, your performance, your trading system behavior changes. Right? We'll focus on focus those things in the afternoon session as well. Again, so aware about unseen risk. So try to avoid. What I'm saying about unseen risk is there are a lot of unseen risk. Let's say you are trading for some time and your internet connectivity is not there for 1 or 2 hours and you're not aware about it, and later you come to know that your internet is not working. Sometimes your data feed is not working for a couple of times. You're facing a lot of issues with power. So there are a lot of unseen factors. You have to be aware about it when you're especially coming into systematic trading concept, because if let's say your internet is not working for some time, you may miss an opportunity, or you may get into a deep risk when those issues are not found and fixed at the proper time. So always when you are setting up a professional system trading setup, you have to focus on try to have a better internet connectivity, and make sure. So there are in some cases it is so critical to you, then better to have a power backup, better to have an internet backup, and better to have an electricity. Better to have a better UPS backup, right? And there are sometimes don't try to download any cracked material from the internet. It may load some malwares in your systems, and eventually your system may get into a frozen mode, and you'll not be able to execute anything in your systems. And if you're having any such questions during that time, it's going to be a tricky one for you to figure it out. Sometimes when you're outside when you're outside of your work or something like that. So try to understand where your unseen risk is. Try to avoid it most of your time. So especially if you're a system trader, it's going to be very crucial to you. Even in discretionary trading systems, even if you're a discretionary trader, you have to aware about where is my unseen risk. At least once in a while, you have to go through where is your unseen risk. Are you anytime back focused face such an unseen risk? I had seen a lot of risk. A lot of unseen risk because of power. I lost an opportunity of making money. My power was not there for a complete one full day, and I was in a trade and my position continued, and I hold a couple of options, especially during the expiry date, and one fine day the power was lost, and I'm not able to run to any other places, and my options ended worthless, and I lost a better opportunity. I mean, better trading opportunity there. I lost a better exit, and finally, I mean, my phone was dead because of electricity. My system, I'm not able to have any internet connectivity when there is no power. The moment I went to my some internet shop and tried to open a system, the market got over. So the time you have to focus about your unseen risk and try to understand the stop hunting concept. Stop hunting concepts, many times we are trying to focus in market profile as well. So stop hunting, this is what Investopedia says. It is a strategy that attempts to force some market participants out of their positions by driving the place of an asset to a level where many individuals have chosen to set their stop loss orders. Right? So basically you can see suddenly your stop loss come and trigger. Not only just you, many of the stop loss order will get triggered. Basically we can say like a cluster of stop loss, where most of the time most of the people are more likely to place a stop loss around round numbers. You know that, I mean, let's say market is at 7,620. Most of the people take 7,600 as a stop loss and they go long, and so they are going short. They take some round numbers most of the time. So most likely your it's your stop loss are guessable to some extent, and it's very guessable because you cannot have an you cannot have, because most of the traders are highly leveraged. They take 10x 20x bets in the market, margin bets, so their stop loss is going to be fairly guessable. They cannot take an 25 or 50-point stop loss in Nifty and going in intraday long. So if you are an intraday trader, then you are not a better trader if you are going to take an 100-point risk, right? So most of the intraday traders are going to likely to have some 25 to 30, 40 points intraday stops, and they are going to have it. So the stops are guessable, most of the prices. So if their entry is going to be late, then more likely they are going to hunt it down. The stop loss is going to be hunted down, and just by looking into the market behavior, we are more focused on where the stop loss hunting could happen, right? So by market profile, one can easily analyze it, but if you are designing such systems, then seriously you have to give a think about stop hunting. So one way to understand stop hunting, you can eliminate some of your risk in the market. So midday, there's a concept called midday stop hunting, where see, generally the volumes in the market happens either in the first half an hour or the last half an hour, and even a high liquid scripts are not highly liquid, and it's very easy to move during the mid of the sessions. So most of the stop loss hunting occurs during the mid of the sessions. We call this as a midday stop hunting. Liquidity dries up during the mid of the day. Even with a very less volume, one can move the stock up and down, and weak longs and shorts gets removed from the market. So midday stop hunting, you have to be aware about midday stops. So from a system trading perspective, it may not matters much, but if you are able to spot an midday stop hunting with certain behavior, you can use this as a filters to avoid such bad trades. You can use, I mean, if you're able to spot and where the stop hunting is there, where weaker players are entering, you know what direction to trade, and you can put a ban on your system, and you can say like, I'm not going to trade, I'm not going to take this, I'm not going to run my strategy here because there is a stop hunting risk is going to be there. So I'll let me put a ban on my system unless something different is going to happen. So those kinds of mechanisms you can introduce if you have an enough idea about where the stop hunting is more likely to get happen, right? So generally, I mean, there is a saying there: traders always has too much of size on when he's wrong and too little on when he is right. So emotion makes the people to take more bets. So I always try to avoid huge leverage bets. So even if you are going to have some 5-6 continuous losses, if you are a frequent trader, you have to cross those zones. There are times I had 7 to 10 continuous losses twice or thrice. Last December I had 7 continuous losses, and this month start I had 4 continuous losses while trading market profile concepts, right? So there are times, if by that time if you are very much leveraged, then you're going to get hurt, or you're not you cannot sustain this game for a long time. So you know what is an average shelf life of a trader? Any idea, anyone? What is an average shelf life? A new trader is coming into the market, and what is this shelf life? Shelf life is like he come up with a fresh money and then he go out. Generally, the fresh trader is likely to go out more likely within 3 months. 3 months is the average, and 80% of the people go out with an those who are coming up with a fresh money. Generally, it's 3 months, right? So every broker knows that. So they need an fresh liquidity, fresh blood every time, right? So 6 months, there are, very 15% of the crowd is able to handle for 6 months. Again, they will burn their money. Once again, they have to come up with a fresh money. 2 years, it's the numbers, the percentage is very less. It's hardly going to be 5% are the one who is going to survive for 2 years, right? So better aware about the shelf life of the trader. So it's an, I think had made an interesting. Let's say I had done some. Okay, I done some. Okay, I'll show you. I done some infographic on that. I haven't yet posted because of time constraints. I'll try to post it away. Yes, the shelf life of an average trader is just 3 months. Okay, so if you take any brokerage account, they may have lakh of customers, or 5 lakh customers, or 10,000, 20,000 customers. But the active trader over a period of time will be 10% or 20% of the customers will only actively trading, right? So if you want to be a trader here, survive in the long term, you have to have a rigorous practice. It's like a gym workout basically. See, I'll give you an enough example here. When I'm just started my market profile, and every day I spend closely 7 hours. I'm just working out in a live market 7 hours, and after market hours I'm just spending at least an hour every day. So total my effective workout is at least 8 hours, or you can say like 6 hours effectively throughout a year. 6 into 365. So my screen time is totally, including holidays. Let me take a calculator here. Okay. So last 1 year, I spent enough, so 2090 hours just on going through the market profile concepts. I just go through the videos, trying to learn, try to practice in a live environment, trying to create visualization how market can react. So are you done any workout of this 2190 hours in a year, or at least you're able to do some 1,000 hours of studies, 1,000 hours of studies, whether it could be a live market or it could be a non-live market? How much effective study you have done? How much really you are able to implement in any given year? It really makes sense. It makes you a better trader, right? So whether it could be a system trading concept or it could be a market profile concept, how much effective screen time you are allocating, or how much hours you are going to, just by attending in 2 days of webinar or 1 month of this TradeZilla session is not going to help you out. It's all about how much of effective time you're going to commit yourself for if you're really passionate about building trading systems, or if you're really passionate about this market, to trade systematically, to understand the participants, how much effective time you're going to generate, it clearly matters, right? So anyways, I mean, so this is it. So all these things one has to focus on, and I think we can take a small break, 10 minutes of break, and then we can come back. I think we had spoken a lot about some basic stuff. So what I want to tell you is the realistic goals are not easy to understand. A common man thinks like one can generate returns money easily just by playing with these models. It's clearly not, right? So again, it requires a set of skills. Just by going with the blind buy and sell signals, you may make money for 1 or 2 months. After that, when you're there are phases which will make you those phases will make you frustrated because you don't know the behavior of the trading system. So the whole idea of this course is to give you and how to analyze the behavior of the trading system, right? So afternoon we'll try to focus on, but at this point of time I'll try to focus on the broker basic concepts. Time is very limited. Anyways, we'll try to spend some little extra time today to finish out the remaining concepts, right? Yeah, just take 10 minutes time. So we'll be back by 12:25 sharp, right? Yeah. Okay, I'm back here. So before again getting into the session, need a quick sound and video check. So everything is fine now, so that we can continue the session. So is audio and video quality is fine? Okay, great. Okay, again, let me get into the broker stuff. So we'll go through some of the broker concept, what broker is capable of doing, and why one should try to adapt broker. So broker again, and it's very easy to handle, and even a non-programmer can handle it very easily, and it has an high-speed execution methodology. The backtesting engine is faster. Everything in broker is made to load faster. And yes, it supports algorithmic trading. There are vendors like Symphony FinTech and the Masterclass kind of people. You can automate, and in Indian markets there are a lot of tools available commercially. With broker, you can combine and do algorithmic trading. And one thing you have to understand, if you're attempting to do an algorithmic trading, there are most of the vendors here in Indian segments are mostly the grey vendors who use a lot of illegal techniques, right? But when it comes to legal techniques, very few are there. The people like Symphony FinTech or Masterclass kind of guys, they have very but the cost again, you have to pay an additional cost again to if you want things to make your strategies auto trading, right? And broker supports all the time frames. Whatever time frame you name it, you can get it over there. Right from tick charts to let's say you want to have a 1-minute chart or a 2-minute chart or a 5-minute chart or a 54-minute chart. It supports any time frames, and it supports multi-time frame indicators as well. We'll go through that anyways. It supports multi-time frame indicators, supports backtesting optimization. Now, of course, it does walk-forward testing and portfolio Monte Carlo analysis these days. And it meets the basic traders requirement as well, scanning and exploration. And you can get a lot of custom indicators. There are two ways to get it. One, you can build on your own if you are a coder, or if you have some strategy in mind, you can use a couple of tools like AMI, AFL Wizard. There is a tool called AFL Wizard. We'll go and touch to that, what is capable of doing it. Using that, even a non-programmer can go down and build their own indicators, right? Otherwise, you can find a lot of forums like TradeZilla, Indie Traders, and There are places like Wise Stock Trader. Let me go through a couple of libraries. So there is one website called wisestocktrader.com. So here is a collection of a lot of AFLs here, right? So you can go and get some AFLs. Let's say Fourier transform. Okay. So from there, done this Fourier transform. So you can get a lot of free stuff here. You copy those indicators, copy it, and save this as an AFL. You can import into your AMI broker and you can test it out. Right? I'll tell you how to do this, but prior to that, let me open AMI broker. So AMI broker by default it doesn't comes with any. It doesn't comes with any sort of. It doesn't comes with any sort of database. It doesn't contain any Indian database. By default, if you install AMI broker, you will get only an plain US sample OD database. Right? As I said, you need data vendors, and you have to follow your own data vendor procedure to connect to your AMI broker with exchange data. Right? Whereas there are a lot of if you want data downloaders, there are a lot of data downloaders like GetBow Copy. You can this free downloaders. A lot of free UOD downloaders are there, which will extract data from Indian websites like NSE India or BSE India, and it tries to import those data automatically into your AMI broker. Right? So either you have to depend upon some free downloaders or some paid data vendor downloaders. Right, and it is multi-tabbed. I can have multi-tabs, right, and I can have, let's say I want to have one more tab here, and I can have, it's multi-tab basically, and these tabs are dockable. Dockable in the sense I can make it float and I can move to my next monitor. I can move to my next monitor, and AMI broker also supports, make this floating to normal, and you can also view this into you can say, I'll say tile vertically. You can also see it simultaneously in 4 charts, and you can also maximize it. Let's say you want to have 2 instances of AMI broker. Let me open another instance of AMI broker. Just open another instance of AMI broker, right? So now I'm having two AMI broker running on the same machine. So I can have one AMI broker in one screen and another AMI broker on another screen, right? So you can do a lot of things with AMI broker simultaneously. If you want to see more charts, you need multi monitors to do that, especially, right? Again, AMI broker is capable of scaling up to n number of charts. Whereas if you want to see in any given charts, you can maximum place 4 or 6 so that your screen, your chart will be visible and you'll be able to focus on multiple scripts at the same time. Let's say I can have Bank Nifty 10 minutes here, and I can have Bank Nifty 5 minutes here, or I can even make it as an Nifty. Right? I can monitor as many charts I want, but generally you cannot usually cannot monitor more than 4 or 6 scripts visually at any given time, right? So there is a strong limitation. You have to go for multi monitors if you want to monitor more than 6 or even more than that, right? And apart from that, it has a lot of features like scanning. It can do features like scanning. There's something called exploration. Scanning in the sense it will always look. The scanning feature will always look for only for the buy or sell condition, buy, sell, short cover conditions. It doesn't look for an. It doesn't scans for moving average, or it doesn't scan and gives you any interesting reports. But all it can do is if your indicator is a trading system. If you have any trading system which has buy, sell, short cover rules, then whenever those conditions are matching, it will scan and give it for you. Whereas, let's say, show me the stocks which are having RSI greater than 90, or show me the stocks which is above Bollinger Band or below Bollinger Band. Then, if you want to have any such scenarios, then you have to use something called exploration. right? So scanning and exploration are something different. Scanning always look for your trading conditions to be get matched, uh, whereas exploration looks for your condition. Whenever the condition is getting achieved, it shows a list of stocks. Let's say show me the stocks which is having an EMA greater than 200. You can build an exploration and you can run through the entire universe of scripts and you can get a picture, right? So you can get you can do exploration and you can get the results. And backtest is the one which we are going to backtest a trading system. Let's say how a system performed in the past, in the last 10 years or 20 years. How, if I am going to apply this particular rules, how the system performed in the past. Just by clicking on the backtest button, it will give you a fair idea. Instantly it generates and report. Let's say I'll try to run a backtest in a 5-minute time frame. I'll do a simple backtest. It gives me some quicker information, and I can go through this report. These reports are similar to your reading your company balance sheet report. It tells you how good your trading system performed in the past, right? So it doesn't tells you how good your trading system will perform in the future, but it tells you how good your system performed in the past. Okay, so the difference between scan and exploration is scanning always, let's say I'm scanning here for last, let's say I want to scan from 2014 onwards. So show me the signals which are came in this particular strategy. This is a strategy I'm using, say let's say Super Trend version 4. It's a trading system which has when to buy, when to sell, when to short, when to cover, all those rules. So if I'm going to scan, if I press the scan button, it will tell me when those conditions got matched, what time, whether it is a buy, whether it is a sell. It can give you a fair result. So I can, so let's say I want to understand only for today, show me the scan. Today there is no trade, so it does not give any results. Whereas if I got any trades right from the morning, if I do try to scan, it will give me a list of stocks where I'm able to spot the opportunities. So scanning is to scan for trades which is coming in real time, right? So you can do a real time scanning as well. I'll tell you how to enable the real time scanning. So there is a small settings here. There's a small settings here, and there is an auto repeat function is there, auto repeat interval is there. So if you want to scan every 5 minutes, you have to put every 5 minutes. Let's say you want to scan every 10 seconds, you can put 10 sec and you can press enter. Again, open the small settings tool, make this auto repeat. Okay, now you scan, it keeps on scanning every 10 seconds. So you can see at the bottom here, you can see that completed in 47 seconds. So this get refreshed every 10 seconds and you will be getting a new dashboard. You can see that the scanning runs automatically every 10 seconds, right? So when the trade comes, you will be able to see it in real time, not exactly real time, very close to real time. Right? It scans every 10 seconds, so that is more than enough to identify a trading signal. And let's say you are monitoring some 50 stocks, and when a signal is going to come, you are going to place orders automatically, or you want to analyze on that, then you can do auto scanning or auto exploration. So both are auto doable, both are auto scanning and exploration are auto doable. I'll give you a couple of examples on explorations as well. Maybe if I try to get the under your market calls folder. Okay, let me stop this auto exploration. So let me stop this auto repeat, okay, so that it stops, and let me try to get some, let me open a sample end of the day database, so that I had an, in my local machine, I had a sample end of the day database. So I taken from these guys, Viratech, okay, so this is an NSE database. It's pretty old, it's not updating now. Maybe I have data right from the start till February. Okay. So what I can do, I can take some exploration. So exploration will give you a fair idea what it does. Let me give you a sample exploration. Okay, for basics, there is one explorer, the all-in-one explorer. If I try to run let's say one recent day, or let's say one recent bar. I'm just going to run for entire symbols. Let me explore it for entire symbols. So it may give you a complete picture whether where is the close, what is the volume, what is the Bollinger Band, whether it is neutral or bullish or bearish. So all these things are just conditions which we can write internally, and so that it gives me as a report. It gives me as a report whether I can scan it very frequently to get this picture. Okay, so generally people want to find stops which is greater than 200-day moving average, or people want to find stops which is very close to the Bollinger Band or above Bollinger Band, or people want to understand whether there is an TTM squeeze is there or not. So I'm not just talking in a classical terms. But people doesn't want to do try to check whether there is any opportunity or not. When so and so condition matches, they want to go long or short. So they want to understand. Some people want to go long only if the price is above 200-day moving average. So they want to scan across the universe. So this is what people actually means a scanner, right? So in that NAMI broker terms, it is called as an exploration. Whereas scanning will look only into trading system. It doesn't look into indicators. If you are trying to say, let's say it's just a simple RSI indicator, and you are trying to perform any scan on that AFL, you cannot get anything. It has to be an your AFL should have some trading system rules inside in that programming language. If I say AFL is nothing but an AMI broker formula language. By opening this AFL, you can see a lot of codes over here, right? So a lot of codes, and you need to be well aware about these codes. And for a normal, even a normal non-programmer can understand this, what this code is trying to do. If you're a little bit good with Excel, you can easily understand and AFL to major extent. Even most of the 80% of your works can be achieved if you are good with Excel. Then maybe you can easily handle AMI broker as well. I mean, AFL programming is not a big deal, right? To some extent, but if you have strategies involve complex stuff, then you have to get into a little bit of lower level programming. It's slightly uh, tough for a non-programmer to adapt to that situations, right? Whereas if you have some simple rules like higher high breakout or lower low breakout, N bar breakout, or you want to go long only if there is 3-day continuous days market is increasing. Any such sort of things, it's anything which is very visual, it's doable. With the Amiibo AFL, right? So you want to go long after 3 balls of closing above Bollinger Band. I'm just giving you a blank examples, right? So any such things, any such simple rules are very easy to code and easy to implement and easy to test with AMI broker. Whereas if you want to build something like a trailing stop loss, or you want to have some money management strategies, dynamic money management strategies or dynamic strategies, it requires a little bit of programming experience, right? So we'll focus the basics of AMIBroker AFL in the next session. However, this session will be focusing very little on the AFL programming to understand certain blocks, which is mandatory to understand any trading system from a non-programmer perspective, right? So at this point of time, you can just understand that uh, um, an AFL code can be an indicator, can be an scanner, can be an exploration, or it can be a trading system. So there are 4 things here. It can be an indicator, it can be a trading system. Indicator is just an indicator. Super trend is also an indicator, right? So it just indicates when to buy and when to sell. Whereas it also has an, it just shows a trailing stop loss. But if you are seeing only a trailing stop loss levels, then it is just an indicator. But it also tells you when to buy, when to sell, when to short, and when to cover. Right? That is nothing but the trading system. So indicator just indicates. There are there are indicators like RSI, which tells you overbought or oversold, but it doesn't tells you whether to enter long or short. So on top of it, you have to write some rules on top of your indicator to tell If that particular level has been reached or breached on the upper side or downside, one has to buy or one has to sell, right? So it is so you have, when you have rules, you have a trading system. When you don't have rules, it is just an indicator, right? And any trading system you have to write some couple of scanning codes to make it scannable. I mean, by default, any trading system which is having buy, sell, short cover rules, you can perform scan. Whereas if you have any indicator, if you build some indicator and you want to make it explorable, then you have to perform a couple of steps to make it explorable. Let's say you want to have some give me list of stocks which are in which are given super trend buy mode, and also give me the stock which is also having an 200-day moving average also breached on the higher side. So that comes under exploration, that doesn't come under scanning, right? We'll go through a couple of examples to build how to build a scanner, exploration, everything in detail. But at this point of time, just have an reference. So this all-in-one exploration, it looks for a couple of patterns. So based upon that, if it is above Bollinger Band, it will trade this at bullish, and below bearish, if it is in the middle, it rates as a neutral. Likewise, the moving average, it compares, and then those rules are written here. So you can do it in the Excel also, but this is a one-time work, and you can apply across the scripts, and you can get an instant result by just a press of the single button. It automatically keeps on getting it for the complete list. So this scripts have almost 1,500, 1,300 plus scripts in NSE. So it gives you the complete script scanners, right? You can also have condition-based scanners. Condition-based scanners. I'll talk about condition-based scanners later. But first, try to understand the difference between scanning and exploration. Scanning is to scan trading systems. Exploration is to what you are looking for, whether 200-day above moving average, or you are looking for some Bollinger Band patterns, or you are looking for some scripts which is having a higher liquidity scripts, or you are looking for some scripts which is having a 52-week high or low, right? AmiBroker doesn't come with any standard built-in scanners or explorations. So one has to prepare. If you want to build, you have to build your own scanners and exploration here. Or you can go to the third-party website. You can download the free indicators, and you can use it, right? And if you look on the left side tabs, if you are looking at the left side tabs, there you can see the chart section. This is where all your indicators will be lying on. All your indicators will be lying on this section. Let me open an tab here, plus, and I'll put in a new blank chart. This give me a blank window, and I have to go to the charts. Under basic charts, you can find a standard price indicator, which is nothing but your candlestick. You can drag those indicators and drop it to your screen, so that you get a plain candlestick charts. Right now, you can right click on the chart. You can change the time frame, whatever time frame you want. If it is event database, you can see only daily, weekly, and monthly. If it's an end of the day, if it's an intraday data, you'll be able to see a couple of minute sections. Right? Let me go through a real-time database as well, so that I can understand. Let me connect with this enough. Okay, this is a real-time database. I can now go to an 1 minute chart or an 5 minute chart. So let's say I want to go to an 3 minute chart. How I can do that? Here there is a bar here. I can type 3 and M, so I can easily get a 3 minute chart. Even like if you want a 54 minute chart, type 54M, you get a 54 minute chart. So your charts are highly customizable, and you can right click, and you can have a standard set of minute bars and range bars. Right? I'll explain you what a range bar chart is also. But let's say you want to have some, you don't have a 3 minute chart here, right? But you are a regular user of 3 minute chart or a 7 minute chart. You want this here, then you can go to Tools, Preferences, and you can go to intraday, Now you can set your favorite settings over here, so 3 minutes or 5 minutes, and apply it. Now you're good to go ahead to test your 3-minute chat. So you have some easy handy access over here. So 3-minute chat, we can easily get it. Likewise, if I want to have a 2-hour charts, I can type 2H, 2 hour. If I want 2-day charts, I can type 2D, I get 2-day chart, right? So the time frame is highly customizable here, and there is an zoom in and zoom out option, and you can scroll to the past and front. Or let's say you want to simulate your trading strategy. Let's say you have some trading strategy, something like this, and you want to understand how your trading strategy is performing with respect to time. There is an option called bar replay. You can go to tools, you can press bar replay, and you can simulate your trading strategies, and you can look it visually before playing any strategy live. I mean, bar replay gives you an in a simulation mode. Let's say I want to test from 1st of April, or say let's 5th of April. Let me go 5th of April, April 5th. I want to run the simulation, and my step interval is 1 minute. I'm going to run. So now you can see your, you can see, we'll zoom a little bit. Now you can see this simulation happening, and you'll be able to understand whether the strategy is working or not working. Visually you can get a fair idea how the indicator behavior is, right? So for your visual reference, you can do this. Right, so I guess you understand what is a bar replay is. So bar replay generally, or some people want to practice their forecasting ability. They can also run bar replay charts, and then they try to forecast, try to understand the behavior of the market just by playing with a bar replay. Right, so okay. So I mean, there's nothing great with bar replay, just an simulation tool. Okay, so again, what? Yeah. So let me go to symbols tab. Here is all your symbols will be placed, and at the top you can see a search bar. So this search bar is available from 5.9 onwards, whereas if you are using 5.6 or 5.8, you may not get it. The thing is, if you can type Nifty, and you'll be able to get a relevant symbols over here. Right? So generally, if you are having more symbols and it's tough to identify the symbols, you can use the search box. And there is a watch list here. Let's say I want to have my favorites list of banks, only banks or indices. Let's say in that case I want to create my own favorite list of stocks. I want to monitor only that favorite list of stocks. I don't want to scan my entire universe of NSE pack or BSE pack. I want to scan only my favorite watch list. I have a watch list of some 50, 100 scripts. I always trade only in that particular stocks. In that case, you can create your own watch list, put all those symbols in that particular watch list. Let's say, let me try to build a watch list. If I double click on that, I can give a name to that watch list. Let's say index. So I'm just going to put an index. What I can do is I can right click and type in symbols. I can easily type Nifty-I, comma, Bank Nifty-I. So these are the symbols of the scripts. So you have to be really aware about the script symbols, what symbols you are trying to use. Okay, so easily you can add it, and you can also selecting the scripts. It also changes the charts. So you can have as many watch lists as you want. And let's say when you are scanning, there is a small pipe symbol here. Instead of looking for all the symbols, you can also scan only let's say you want to scan only from the index, only from the index. You want to do some exploration, you can do similar exploration from the index charts, right? So filter helps you out in doing your back test or doing your scanning or exploration only to that limited set of stocks. So filter and watch list helps you to scan only your favorite stocks. Whereas if you want to backtest only Nifty alone, then you can do some backtest. If I try to press backtest, it will try to attempt the backtest only for that current symbols. Current in the sense whichever is having on the symbol bar. This is a symbol bar. You can click on the drop down and you can get all the symbols. Right. So if I'm trying to press a backtest, it will try to do a backtest only for this particular symbols. Right. And let's say I want to trade a strategy on both Nifty and Bank Nifty. Then in that case, I have to apply a filter. Select the filter and make sure that you are selecting the relevant watch list. Okay, now I am going to do my filter has two symbols. My filter now currently has two symbols. One is Nifty and Bank Nifty. So now if I try to do a backtest here, my system will check whether how the system has performed in the past in both Nifty and Bank Nifty and gives me a cumulative results. Right? It gives me a cumulative results. So current takes the value from here, and all symbols scans for the entire universe, and filter selects only the data from the watch list. There is also a range. You can also backtest only from a particular set of period. You can backtest only what happened in the last one recent day. Let's say you want to identify, give me the list of symbols which are in buy mode till today. Right? You can use this one recent day or one recent bar. And all code if you want to backtest for the entire historical data. And from to date, if you want to do the backtest within the selected data points from and to dates. Right, so you have the complete flexibility here, and just give me a second. So this is all about the basic introduction. Can we backtest intraday signals also? See, yes, you can backtest intraday signals also. Prior to that, you have to understand whether a strategy, how a strategy has been made, whether the strategy is built, is a positional strategy or the strategy itself an intraday strategy, right? So if you want to, if you say like intraday signals, right? So you're talking about intraday strategies which has some even if there are no conditional based exit, you have some time based exit. Let's say you're continuing your longs, but after 325 you're going to close your position. So such sort of condition has to be presented within the AFL, right? And let's say you have some AFL something like this, and you want to test this AFL. This AFL is called Fourier transform. I got this from Y Stock Trader. Okay, so this is Y Stock Trader. Here there is a Fourier transform indicator here. I don't know what it does. So I looking little exotic to me. So I also want to try it out in my Indian markets. What I can do, I can copy this content. I can go to my charting, right click and open and go to edit formula. Okay, you can this opens an Amiruka AFL editor where you can edit or create your own new formula. So apply a new formula. You can also go to this AFL formula editor from file here, file new new formula, right? So this opens an AFL editor. Paste your code, and there is a small verify syntax button there. It's marked with a tick mark. Click on it. It will tell you whether there is any error in the code or not. Let's say if something is missing, it will tell you some error is there and you have to fix somewhere near to here or here. The error is there, so you try to fix it. And again check it. So only if there is no error, then only the program will function. Now you have to save it inside the folder, file savers. Just going to the basic charts. You can put it in any formula folder, so you can put it in the formula folder. Basically, it is stored under your program files, AmiBroker folder. Under your folder, there is a formula folder is there. You can see a lot of categories. So these are the categories which you can see under the charting section. These are the categories you can see it under the charting section. And let's say I want to put it into basic charts, and I'll put some name as Fourier transform, right? So I got a Fourier transform indicator. I also check the syntax. Syntax is working good, and it automatically says in a .afl format, right? I can also go to my place where I can see the C drive. So I placed under program files. It is, yeah, program files, ME broker, and you can see the indicators under the formulas folders. So all are categorized. You can have multiple categories also, or you can create some folders also. Let's say I am creating a folder name market calls 2016. Okay, so I'm created a thing over here, and now if I go to charts, let me refresh. That is exactly what I created. Market calls 2016. Let me refresh the page. Okay, I think I have to close and open AMI broker. Just close and open AMI broker, you will be able to see. I'll do that anyways. Close and open your AMI broker. You will be able to see this market calls 2016 folder. So you can place all your new AFL files under that. New AFL files under that. Exactly this. Come on. I'm sorry, I think my actual path is not under C drive. I'm using a 32-bit version of AMI broker. So I have to look into program files x86. Program files x86. Okay, I have an AMI broker here and formulas here. Okay, so here can what is the issue here? Market calls 2006 is not there. Okay, let me paste market calls 2006 here. Market calls 2016. Okay, I create a new folder here. I'll close this. Now I'll open. Now I can place all my AFL files under this section. Okay, so let me slow down further. If I'm going to slow down, it's going to take more time. So anyways, I'm comfortable in taking more time to explain. So let me open a blank chart and let me go to the charting section. You can see the folder appearing over here, right? So you can either download the AFL files from the internet and you can place your AFL files in this particular file. That is also fine. Let's say I have some AFL file here. Let me put some AFL file. Let's say I'll try to open some AFL files. So let's say, so some guy is having intraday profit generator using RSI and ADX. Okay, let me open this very interesting topic. Okay, so copy and paste friendly, copy this. Okay, and let me put this into my notepad, go to file, save as. So which path you have to save? You have to save it under your C drive. Programming files x86 because I'm using a 32-bit edition. Generally, this you don't have a program files x86 under if you're using an XP or a Windows 7. This is from Windows 8, 7 onwards. So mine is 32-bit edition, and I'm just opening my AMI broker. Under my AMI broker, I have an formula folder where all my AFL formulas have got stored. I'm just opening that, and under that I'm just going to place under my market calls 2016 folder. So this guy has a name intraday profit generator. People will have all crazy names, right? Because they have the name, it doesn't mean like the strategy makes money. And always you have to put an extension of .afl while saving your, especially if you are doing it from the notepad. right? It's always recommended to use AmiBroker AFL editor to do that. Whereas if you're using any other notepad or something like that, make sure that your extension is all files, and you're saving in the name of .afl, right? I'll save this. Now I'm just going to come back to my AmiBroker. Okay, I'll do and right click and do and refresh so that it updates. Now you'll be able to see this intraday profit generator, right? And you can do so I think this looks like some sort of a simple system, right? So I drag and drop. Okay, so they have some studies coming here. I don't know what they does using this. So they have some signals here. So right, let me put this in an maybe they may be using in a different time frame, Harley or something like that. Okay, so they have some systems here, so maybe they have some writings also. So you can put it into a machine and you can test it out. So let me give you some. People generally love colorful indicator. A colorful indicator doesn't means like it will make money. So if people are most prone to take a colorful indicator, maybe the most accurate trading in commodities, goldfish dynamic Heikin. Okay, so let's give some. Okay, let me take this. What these guys are doing. So some of them are exploration, some of them are indicator. So you have to aware about whether the AFL which you are getting from the external libraries and indicator, or it is an let's say it is an trading system, or an scanner, or an exploration. You have to understand the classification. Over a period of time, you will be able to classify it. But at this point of time, you have to aware that whether you're some of them are systems, some of them are scanners, some of them are explorations, and some of them are trading systems as well. I mean, a trading system is nothing but a scanner. You don't need to do anything with that. If it is a scanner, I mean, it is a trading. If it is a trading system, it will also act as a scanners as well. Okay. Okay. So I got this. Now I think this is not an indicator. Okay. Some guys have some goldfish dynamic Heinkinashi AFL for AmiBroker. Okay. What is this? Let me copy it and let me know. ADM, I'll come to that, your question. I mean, first let me solve this. Okay. Click, and I'm just going to the formula and paste it. Save this. Okay, you get some interesting, colorful signals, right? So you can just go to libraries. A lot of libraries available there, and I post all my libraries under marketcalls.in/library. I have my own library where you can find some systems. Some of them are prototypes, some of them are systems, and some of them are indicators, some of them are scanners. Again, we have to be very well aware about it. So I have so what have I done? Some of them are system reviews. Some of them are interesting indicators like gap identifiers or something like that. And most of them are systems, trading systems. And very few are indicators. Right, so you can do a lot of experimenting by going to that particular link, and you can download the AFL code, store it in your local machine, and then later you have to apply it. Right. So let me take some questions. We have a couple of questions here. Articulate my expectations from this session. I am keen to learn AmiBroker from basics step by step rigorously. You're going to learn as well, but at this point of time, I request you to just watch for some time, and then I also recommend you to download this Dropbox link, right? So I will recommend you to download this. Okay, so you will maybe I want you to download all these links, download it so that you can practice along with me when I am practicing during the afternoon session. Like when I am doing and backtesting, you can also do, and you can also apply it, right? What do you want to know how to use it? Go to the book again. Yes, we have a practice session, but these are just intro session. We are starting everything right from the scratch. Morning, what we focused is just a practical view of how to look into the trading system concepts, right? So we are just now focusing on AMI broker. Just allow some time, right? We have abundant time to focus on practice session, and most of the experience comes from practice session. We'll have it, and you're not just going to watch. You can also practice simultaneously along with me, and prior to that, in the afternoon I'll be explaining you the steps to install dummy broker along with the sample data, which we are going to practice throughout the session, right? And that will give you an enough practice to backtest or to understand any trading systems. So prior to that, there are a lot of concepts which you need to focus if you are very new to AMI broker, right? And I mean, anyways, the video is recording, and anytime you can watch again and again and again, and you can practice it. So if you're not able to solve it, and I'm here, and I'll be here in the Slack chat to help you out. Is that sounds fine? Okay. See, I mean, I can promise you, like, you're not going to watch anything at speed of light. Let me, if I want to tell anything, I'll slow down from here onwards. We'll take more time, and we'll try to solve it. We'll move in an fair pace. We'll move it, right? So thing is. So now I guess you are able to understand about the charting section here. So this charting section where all your indicators are going to be placed, by default it comes with some pre-built indicators like averages, which you find in your classical textbooks. So these are the things which you are on a very new trader, you will try to go through all these indicators, and all your price, your candlesticks, everything comes under your, this may be different from your screen because I have a lot of custom indicators inside that. Whereas you'll be able to get some indicators like all your volume, open interest data, everything will be under in this section. Your candlesticks. So I tell you how to apply the indicator. There is a plus sign here, like your Chrome tab. You can press the press button, and you can go to new blank chart, right? And from there onwards, you can drag and drop. So anything you want to apply over the screen, you have to right click and you can do a drag and drop. Okay, and let's say you want to have an RSI on top of this. Any classical indicators, you will be able to find it out under the indicators folder. So you can see an indicators folder. All your classical indicators, RSI, MACD, all your classical textbook indicators will be here. Your ATR, right? Let's say I want to apply RSI. So right click and do an insert. You'll be able to get an RSI, right? So if any indicator you want to apply over the charts, so two things you have to focus here. Anything you want to apply below the charts, you have to right click and do an insert, which this is an underlying indicator. Underlying indicator we will plot generally below the candlesticks. But there are indicators like moving average, you will be plotting above the over the charts. So anything you want to plot over the charts, as I said, you have to drag this and drag on top of where you want to plot exactly. So now I plotted over the candlestick. Now I'm able to get the EMA line over the candlesticks, right? And let's say you want to change the colors or settings, you can right click over the chart, go to the parameters, right? Now scroll down and you will be able to see the settings. Now say like you don't want a 15 period EMA, you want say 30 period EMA, you can get that, and you can also see it live. And here you can also see a small slider here. If you click, you can see a small slider here. You can slide and you can change those values, and you can see this in real time. You can also change the colors. So all the functionalities are provided in the default AFL, which is coming with your pre-installed AmiBroker setup, right? And let's say I want to plot an EMA on top of RSI. I can drag and this EMA over the RSI frame, RSI block, okay, and this computes price field here. You can see this computes the EMA for that particular RSI. EMA of RSI 15, that's what it means. Okay, so let's say now I want to plot an hull of RSI. Hull of RSI. Now in that case, what I have to do, I have to have some RSI. Now I want to plot an hull moving average. I think hull moving average is not here, so but I can prepare it. So I'll go to edit. I'll open this EMA. Instead of EMA, I'll put HMA. HMA is a standard function in AmiBroker, which is nothing but the hull moving average. So I'll go to file. I'll save this as hull moving average under the same folder, under the average folder. I'll put like HMA hull moving average. It's hull moving average. Okay. Now we have HMA here. What I'm going to do now, I'm just going to charts, HMA, drag and drop over your RSI. So now you got HMA, your blue line is your hull moving average. You can see it is completely smooth compared to your traditional RSI. The indicator is smooth and it is also responsive. Right? Generally, I used to prefer 7 period so that it's smooth. The data is smooth. The data points are smooth compared to your zigzag RSI. Right? So generally, we use hull of RSI as a sentimental indicator. Right? I can also smooth this RSI as 7. RSI as 7, hull as 7. It's smooth and let's say I don't want to plot this. I'll make this. So now you'll get only hull of RSI. Right? So generally I use it in the daily time frame. Hull of RSI. Right? It's equally comparable, but when compared to hull or Zurich RSX, Zurich I do prefer more weightage when it comes to responsiveness. So this is how we can build nested indicators. So you can build an let's say you want an I'll give another example. Let's say you have an RSI. You go to an RSI. Where you can find the RSI. You can find the RSI under the indicator section, right? And so RSI, yeah, here. So right click insert, and let's say you want to plot a Bollinger Band on top of this RSI. You want to put a Bollinger Band on top of RSI. The Bollinger Bands will be there. There's a band section will be there. There you can find the standard bands, Bollinger, Keltner bands, and percentage band bands. Drag and drop this Bollinger Bands, and now you'll be able to plot the Bollinger Bands for RSI. So like this, we can build any nested indicators. Nested, you can do that, and it's very easy to build again. Right? Some people who are following classical technical analysis has such requirements, whereas in system trading perspective it doesn't make any sense. But anyways, it's good to know about how to build things, right? Okay, let me close this, and you can close a plane. You can close a plane by right click over the charts and close it. Okay. How can we draw a reference line in RSI indicator? Yes, I'll try to put those things as well. Yes, let's say you have an RSI here and you want to draw. There are a lot of drawing tools here on the. You can see it on your right hand side. A lot of drawing tools here. Sometimes it may be aligned because it's movable, it's dockable. So you may sometimes find it at your top, or sometimes you may find it at your bottom. There is an horizontal line is there. So let's say you want to plot a line at 0. I can place my line, I can measure it. Let's say I want to plot it at, let's say I want to plot it at 100 or 50. Okay, let me take this as 50. I want to plot it at 50. I'll come to that. Okay, I'll plot a line, but it is not exactly at 50. Now what I can do, I can double click the line and I can enter the value as 50. Okay, now it exactly sits at 50. So you don't need to be very perfect while plotting it. Double click the line and wherever you want to place, let's say you want to put it at 60, make the 60 and make your colors and that's it, done. Okay, now you want to replicate that. You just plot one more line, as simple as that. Okay, so one more line. So you want increase the thickness of the color. What do you want, thick line or dotted line? You don't want a dotted line, remove it. Place this at 60. Just by double clicking over the line, you can able to get this features. Right? So you can plot it thick red, thick the line width. You can change the line width. Okay. And otherwise, if you want to draw some simple trend lines, let me delete this indicator. So if you want to delete the indicator, okay, don't delete it from here. Don't delete it from here. If you're right clicking and deleting from here, the indicator will get deleted. Okay, you have to be very careful about it. Don't do that. If you want to delete indicator from your screen, right click, delete this indicator, and then if you have multiple indicators, one is on price, which is an AFL, and again EMA is again an AFL, right? So if you want to delete only EMA, right click and press only EMA indicator will get deleted, right? Otherwise, if I'm right clicking now and I'm going to edit formula, I can see all the indicators placed on top of it. Now price is an AFL, EMA is an AFL. Since I drag and drop over both, so the AFL is getting concatenated. Right, this is what you want to understand, and I'm deleting this EMA, so I have to right click, indicator, I'm just deleting only the EMA, press yes. If I'm deleting this indicator from the screen, the AFL is not getting deleted, the AFL is still remaining here, AFL is still remaining here, the AFL is still remaining here, right? So where is the AFL? AFL is here. EMA, yeah, EMA is here. So if you are right click and deleting from here, let's say let me try to delete this hull of moving average which I created some time back, and it's gone. And now you cannot get it back again, right? So while if you're operating from here, you have to be very careful. And let's say you want to you can categorize scanners, you can create bunch of scanners here like this, and you can categorize it. You can categorize exploration. So the folders are meant to categorize it. You can name your own folders, nothing wrong in that. You can put your own custom indicators, again nothing wrong in that. You are free to experiment. But one thing you have to be aware about it, 95% of the thing which you are finding in the open market is more going to be dumb one, right? So if you are finding anything interesting, make sure that you are putting enough efforts to understand what it is exactly, right? People have all fancy names here, all colorful indicators here, and let me try to plot a stochastic here. So simple stochastic percentage D, and it's a combination of percentage D and percentage K, right? So percentage D, and again I have to draw first. Okay, let me do this again so that you can understand. So clearly understand this. Percentage D, it's an underlying indicator. I'm just going to right click and going to do an insert. So my percentage D comes. Now I want to plot on percentage K as well. So now I have to plot this percentage K above this percentage D, drag and drop over that particular plane, not this plane, but this plane, right, the bottom plane. Drag and drop, you'll get this stochastics. So I mean, Broker doesn't use as a one indicator, they use percentage D and percentage K as an two different indicator. When it comes to pivot points, yes, you can have all sort of pivot points, but by default, Broker doesn't have that. You can get it from the free market. You can get it very easily. Just you type Broker pivot point AFL, right? Some people in this world would have done that. Okay, so there is a pivot point pasty for that. What is that? Pivot point pasty. Okay. So multi pivots. This one thing will give you an access to all the pivots. So you name any pivots, they have access to classical pivots, a simple pivots what people does, a simple formula. There is also Woody's pivot, Fibonacci pivots, and I think this doesn't have any Camarilla pivots, I think. Okay, let me check what this AFL code is going to do. I'll copy this. Okay, I'll copy this. Okay, there's a copy and paste friendly button is here. I'll copy here and I'll open my ME broker. Right click, edit formula. I'll give a new formula. Okay, I paste this. Now I'm going to place this and I'm going to save this as an AFL file. By default, it has an AFL extension here. Let's say I'm just going to put it inside basic charts. So I name as pivot point. Okay, so now I'm going to apply this over my charts. I need to have a candlestick charts. Otherwise, if you're starting anything fresh, you click this AFL, put a blank chart, and go to charts. Make sure that you are first adding your candlestick indicator. So candlestick indicator will be under the basic charts. Under the basic charts, you'll be able to find this your price. So in my case, you are seeing too many indicators, whereas if you are installing fresh, it will be very limited. So price, drag and drop to the screen. So now you have the price. Now you want pivots. So pivots, where is the pivot? So pivot points. I saved it, right? Pivot points. Pivot, yeah, it's here. Where it went. Above price, okay. I'm sorry, I missed it then. Yes, pivot points. Just drag and drop because you are going to plot on top of the indicator, right? So the color has been got changed. Okay, so this guy has designed his pivots. Every day it gives an support 1, 2, 3, and 4. You can watch it in 1 minute time frame or a 5 minute time frame. Okay, so zoom it. Color looks crappy, but still it's fine. So you have all the levels plotted: S1, S2, S3, pivot point, R1, R2, R3, right? And you can go to parameters, and you can also type. You can select your background. Okay, let me put. Okay, this is an. Okay, so background inside the candlestick, it seems. Okay, so they have some pivotal style, and daily or hourly, what sort of pivot you want. This is the intraday daily, it seems. So there is, what does this eBody does? I don't know what this does. Okay, so classical Woody's pivot, Fibonacci pivots. So people does all these things, right? So you can find anything. Let's say you want a Camarilla pivots. You just go on Google Camarilla pivot, any broker. You name any famous classical technical indicator, it's available there in AMI broker. So you don't need to worry about it. So yes, I done a long time back, some 3-4 years back. So it could be an AFL code. So all you can do is you go down here, download the AFL code. You'll get a zip file. Open the zip file. Okay, you get the AFL code. Copy this and go to your. Let's say I want to put this under market calls 2016. I have a folder which I created some time back. I'm going to place this Camarilla AFL. Okay, the Camarilla AFL is now inside market calls 2016. So I should go to my AMI broker. I can get this Camarilla pivot under my charting section. I have to go to market calls 2016. Right click and refresh, so the folder gets updated. So you are able to see the Camarilla AFL. So right click and insert, because so now you will be able to see this. Now you'll be able to see this Camarilla pivots here. So your Camarilla pivots is here. So generally some people tend to use Camarilla pivots, right? So some people think like the Camarilla pivots are respected. There are people I've seen they are using market profile along with Camarilla pivots, but seriously I don't understand how these guys use pivots. Sometimes it looks like it is exactly rejecting at those lines, but I mean seriously, I mean it's not the when it comes to practical trading, it has its own challenges, right? So Camarilla pivots with support levels, and it has some indications as well, what to do, sort of indications. Are we clear? I think we can take a break and we can join by 2:30. You can have your lunch, and I request you to join by 2:30. We'll continue, and I think today the session will extend till 6 o'clock. I request you to be here till 6 o'clock because we are going very slow, and we need extra time to finish the basics. So I mean, anything you want to say, some of the classical things which you are expecting may not be there in AMI Broker, but the community had done already there. You just Google it, and you'll be able to make it out. So there is a small button here, plus and minus button, which you can zoom in and zoom out. You can do as zoom in as many number of data points you want to watch. So you can see the entire data set, and you can also zoom out. So it's flexible in AMI Broker, and it's user friendly as well. Right, and you can also save this as a template. So save this as a template so that you don't need to apply, you don't need to get this every time. So let me create a template under a document or any folder you are comfortable. Let me create a template here, new folder. So you are the one who should track where you are placing your templates. Let me put like AMI templates, okay. And give me an example, Camarilla. So Camarilla pivot. Okay, so next time what happened? So template, save, let me give a name, Camarilla. Okay, so the name got saved. Let's say you're opening AMI Broker and you're getting something and you immediately want to access Camarilla. Right click, go to your templates, load, and then you get Camarilla here, and then open it. You get Camarilla, and maybe you get the Camarilla. Right, so you can have multiple indicators. Say you want to have one more indicator on top of this Camarilla. Let's say you want to watch a Bollinger Band also suddenly, and you can also save this as a template. So you don't need to apply this indicator again and again over a period of all the stocks. So you can put Camarilla plus Bollinger Band, put BB, Camarilla plus BB. So next time you are here and you want to apply that same setup. Let's say you're here and you want to apply that same setup. Immediately you want to go to that Camarilla. You can go to template. Now you have to type plus load. You can select Camarilla plus BB. You're done. Right? Let me take some questions. So how to zoom in and zoom out, I completed, and the pivot points we are done. And can we draw a reference line? This one we are done. Okay, I'm seeing TD sequential AFL. I'll try to explain it. It's a concept. I mean, maybe not now. Maybe I'll sometime later. It is an indicator. I mean, some DMARC had done that. It's a study, but I'm not sure. I seen TD sequential AFL in Bloomberg terminal, and compared to that, I think the AMI Broker version is not exactly matching. It is so somewhere it's not that great. AMI Broker edition is not that great. The people who are coded the TD sequential AFL, I mean, had done the thing, but compared to Bloomberg, what is there with a paid one, it's not that great. Okay, there's a couple of questions as well. Okay, if you are not able to see the sidebar in your charts, that you have to pick it up from your window. So there are ways to you can enable your side tabs. I can disable it. So now the symbols will be gone. I can disable the charts. It will be getting gone from the side tabs. Now you want to enable it. You right, go to Windows, click on the charts. Now it should enable. Now you should be able to you see this, and there is a small pin here. You can click it and then it pulls back it in itself. So you can click, it'll automatically slides, and you click on this pin, it automatically pulls back inside. Right, I guess that is also answered. Can you please load the Camarilla template without BB? Yes, I done on two templates, right? So one is Camarilla with BB and without BB. So right click, template, load. So Camarilla is there, the template. This is one without Camarilla. I'm sorry, this is one without. Oh, I'm sorry. Think. Yeah. I think I have to close and save this template as Camarilla. Okay, now one template is there with Camarilla, and another one template is with Camarilla BB. So you can have as many templates you want, but generally if you're a trader, don't try to mix more indicators, and don't look for double confirmation from multiple indicators. The more the indicators you use, the more you will get confused. Especially either you are using a discrete style or you are trying to cross compare and system trading with an indicator, try to putting some filter. Adding more and more filters deteriorates the performance actually. It's called indicator piling. More the indicators you are more likely to use, more the confused state you are. The double confirmation in the market actually doesn't work. There is no point of looking for any sort of double confirmation. That is the reason I build my discrete trading style differently. Sometimes I go in line with my indicator, sometimes I go against my indicator, and I have clear rules when to go in line, when to go against the indicator sentiment, right? So if you are thinking linear, it may not work that way. So the question itself a wrong question. I can tell you many people have this question, what is the best indicator to use? There is no best indicator to use at all. Every indicator is just a plain mathematical tool. So if you're thinking like a best indicator is the one which is going to give me an best returns because it is having a greater predictability, no, in that case you are wrong. I mean, there is no best indicator actually. I use Zurich RSX. I say from my perspective it is the best indicator because it is highly responsive. It turns at the peaks and trough most of the time. Again, it's a mathematical tool, but the thing is it is very responsive with respect to the price. It's highly smooth, and most of the noises got eliminated from the signal, so it eliminates most of the noise. So I'll say it is an indicator, Zurich RSX. It has little predictability, especially at the peak and trough. Let's say I'll try to plot for the Nifty charts. So this is Nifty, right? So I'll try to plot on the daily time frame. Let me go to the daily time frame, and let me plot this Zurich RSX as well. So Zurich comes with a lot of tools. One is on Zurich RSX. Right click and insert, and generally I use period 7. So the color here doesn't matters anything over here, whereas I done a little bit of variant in our analytics tool. So most of the time you can see the Zurich RSX started falling, and the markets also fall. So when it rises, markets also rises. It falls, markets also falls. Right? It rises, and there are periods when the trend is going to be prolongedly, it's going to be strong. You get a lot of whipsaws, right? So, but when the market turns, immediately it also turns. It turns down, it turns down. It turns up, it up. Market turns down, it does. So it's very responsive in tracking the trend of the sentiment. So I'm just using the market profile to understand my positional bias. So it's a bias to me. Again, I'm not using anything to predict here. If this indicator is going to turn down, I'm not predicting that market will turn down. I'm not doing any prediction works using this indicator. I'm saying like my bias is down. I will tend to take more short trades, right? So this is the way I play my discrete style of trading. I use this indicator as my bias factor. Because when trading with market profile, you may have upper levels as well as a lot of downside reference. So which level to target, what level to target, I use this indicator just to focus on whether should I have to focus on upside or downside. I use that. So when the indicator turns, my bias will again turn back. So again, I'll think on the long side direction whether to take a trade or not. And there are times when I am seeing an emotions in the market. I also try to trade against the indicator, especially on the hourly time frames. Hourly time frames, when I am seeing in one-time framing, my sentiment will be still up, but I'll still go short. My sentimental indicator will stay still positive, but I'll take an negative direction. My bias will turn negative if I'm seeing emotions, one-time framing or gap sort of emotions. So that way I design my rules in a dynamic and flexible way to look into the indicators in a different way. I'm not looking very linearly. Linearly in the sense, if it goes up, I'll go up. If it goes down, I'll go down. So I haven't designed in that way. I included emotions as a part of my filter, so that I can change my rules dynamically. Got it? Okay, could you please? Okay, so anything else we can come back by? I think we can all start back again by 2:45. I think we have taken enough time in explaining things. And any questions I can still able to answer in the Slack, right? And we can back again by 2:45 p.m. sharply. The session starts in the afternoon by 2 p.m. 2:45. Let me put it down here. Heavy broker backtesting session will start by 2:45 p.m. Be sharp. Okay, cool. Just closing the session right now. Things got. So thank you everyone. Thank you for your time, and we'll see you around 2:45 p.m. again. Okay, thank you everyone.